Motherfucker.
Hello, hello, hello. Guten Tag. It's March 24th. All right. So I scheduled this for the morning thinking some other Trump tweet would come out, but no Trump tweet, so nothing to talk about in the morning. All right. Let's see what we got to cover today. Let's go over certain things and then plan out how we want to approach the Friday, okay? Because yesterday morning, 4 o'clock Pacific, my time, I woke up and then there was a Trump tweet and it pushed the market up. Well, well, well. Huh, huh, huh. So he delayed his deadline for 5 more days from that point, so the next deadline to blow up power plants will be September in the morning, probably around 6 o'clock to 7 o'clock Eastern. Then he'll blow up the power plants, right? I don't know. You guys will have to figure that out. It's just really whatever. You can't really do anything about that. Okay, let's consider certain facts that we have right now. Are we going to get another taco by Saturday and we get a pump on Monday into April Fool's Day? Then we can crash. Is that the plan? I don't know. So, something interesting happened this morning outside of any major Trump tweets. I saw that the FDN and the IGV software and communication services stocks went down. So this is where we at on the volume profiling out here. We're on the cliff's edge. We probably are off the cliff, kind of, and we have a little rope that someone gave us, and we're just dangling out here. It will be quite easy just to push this down, given how weak everything is. There's a lot of volume the past couple days, but as you can see, no results so far. We haven't been pumping. Nobody really wants to take a stab at it and say, yeah, we can pump into Friday right now. Yesterday was pretty much it. If you look at the SPY, we went up to about 662 on the SPY. That's the level I expected things to go around 650 to 660. Maybe we could get to 670 if there's another tweet coming along, but there's no earnings this week. All right. It's all on the news as well. I don't know what caused IGV and FDN to move down, but that's pretty significant. I don't know what happened here. I don't know what news happened to Microsoft or Oracle or what. It's like, what? But they all went down together. So it might have not been anything really to do with any news. It's just the fact that, like, people overall don't want to stay in here. And that makes sense because pre-market, I didn't see anything with the oil stocks, but then once the market opened, the oil stocks just went crazy. Okay, it's just like, okay, well, maybe people just have gotten fed up with staying in AI and they're just moving their money into oil stocks now, which is crazy because I told you guys to buy oil way back when. And let me look at how things are with UwU, right? So we're about 25 minutes till the close. So if you look at UwU, all right, let's see here. Let's see. So I said probably, what was it? So the beginning of February. So the end of January. So sometime over the weekend here, I said buy UwU. So if you bought right at the open, let's say here, you are up about 75% today. I would, if you didn't sell last week and you're still holding for that pump this week, I think that's the pump you should expect. You're basically betting that Trump will start bombing a bunch of reactors over the weekend. And maybe you might get another pump, but maybe not, because UwU has a lot of refinements into it. This is why I told everyone to get into Gush and NRGU. So 2/3 NRGU 1/3 Gush. Gush is just 2x leverage of XOP though. So I don't know if UwU will move as you would expect once Trump escalates the war over the weekend. So if he doesn't taco out over the weekend, and he does actually go through with his threats, then that's a pretty good amount. I expected 100% over like many months, but we've gotten there within 2 months. This is 2 months, and you got 75%. If you're still holding UwU, I'm just like telling you, well, I'm not saying, whoa. I mean, you have already a lot of gain, so you can hold it if you want. But for me, I'm just like, I think this is good enough for 2 months. I'd rather shove it into bonds right now, take my cash, go back to bonds. I mean, it also depends on how much you have, right? And how much of a percentage of your portfolio is UwU. If you have a lot of it in UwU, which is what I told you guys to do. It's like if DJ MFB came to me and said, I have 20K. If I had to buy one thing, what do I buy? UwU. That was it. I mean, if I had to turn off my brain and go for the easy play, that's it. I don't have to like look at it every day or whatever. I really plan not to look at it every day and wait like 4-6 months and it will get up to 100%. But it's already here after 2 months. Bro, that's pretty good. I mean, I don't know, man. If you want to hold on to it, sure. Okay. So yesterday, Trump tweeted, and the Sunday night I told you guys what I would like to get into was GDXU. Trump ruined that because GDXU was down 20%. Okay? It was down huge. And even as gold and silver were recovering overnight on the futures market into European time, GDXU was still pretty much like negative 15, 16%. It was terrible. This would have been a great buy in the morning. If Trump did not tweet 2 hours before the market opened, I would have bet that silver and gold would have rolled back down. GDXU would have rolled back down. And, man, let's say, damn it. So this was Friday, right? Okay, let's say it would be down. Let's say it could have went down 27% to $100. How about that? Bro, if Trump didn't tweet at that time and kept it going for a few more hours, maybe for the whole day, and waited until after the market closed to tweet it, because the deadline he set was around maybe 7 at night Eastern time. So the time he tweeted, 48 hours after he tweeted, it was probably 7 p.m. Eastern time. And, he had a lot of hours left on that deadline. He could have waited. And guess what? That would have been a 60% pop on Tuesday. If he waited to tweet, if he just waited, fuck, that would have been 60%. I did place GDXU anyway, though, on the open. But all I got was like 10% or 9% or something like that. I was like, fuck, man. This could have been a 60% trade instead of a 10% trade. What the hell? Oh, my God. This would have been one of the best trades this year. Within 2 days, you could have got 60%. Damn it. Anyway, but yeah, for now, what do you want to say about GDXU? Do you want to, like, if you guys got in yesterday, maybe you're asking me, do I hold it? If you just kept holding it, I don't know. If you think it's a taco, if he's not going to bomb anything over the weekend, it could go higher for sure, very easily. It could close out all these gaps and go up. So to measure this, so let's say we break this green line here at 84 on GDX. So GDXU is the 3x leverage. So let's say we get back around 90, 92. So that's a 9 to 10% move. Okay, so then we should get a 30% more bounce off of this. So 30% would be around here, 200. So 205. So if you are still in GDXU and you think Trump is going to taco, you're willing to hold over a weekend, your potential is 30%. That's the risk. That's the profit you are probably expecting. But the risk is, well, the risk is because gold already recovered. So let's see. Gold. How much is gold gonna? Well, yeah. See, you could see like overnight gold was already going up before this pump here. So gold was down from, let's say, Sunday. Okay, so let's say here, gold was down nearly 9%. Okay, it was already recovering before the Trump tweet, but GDX was still bad. Okay, so it already recovered 4% from that point. All right, so let's say Iran and whatever gets bombed, oil spikes up again, natural gas spikes up again, then 8% down. So I don't know how that would affect GDX proportionately, because let's say it was down 8% and GDX was already down, how about 4 or 5%, I guess. Let's see, do the math. So maybe 7%. So let's say we go down again. Okay. So 6%. So probably around 78. But let's be conservative and say it goes down to 75. So I'll give it 9% down. So let's say it can drop another 30% on GDXU. How about that? How about that? So you're risking a move from here at 158 to 200. All right, but if Trump actually does mess things up, then maybe you could lose down 30% down to 111. I guess that could be the potential loss. So that's pretty bad, right? That's not a good gamble. That's why nobody would take that trade. And futures doesn't trade on Saturday. They open again Sunday at 6 p.m. Eastern. So you have a window there where you can't trade on the futures market either, gold and silver. And if Trump does mess things up, you have to wait, right, into the overnight. So let's say you have Robinhood. You can trade GDXU on Robinhood, but you got to wait for that. So what's your advice? Nothing. You should have made your money already. The easy money was already made. This is why I make my money on something that's not news related, okay? I didn't expect oil to move because of news. I expected oil to move up because of cycles, all the analysis I did. It's done. You have 75%. You're being greedy expecting like what, another 30% on that? I think you're done. The risk and reward no longer really look good right now. You would have took your money today, or maybe you're going to wait for a little bit higher pump in the coming days, but you're risking it because Trump can tweet again at any moment, right? He can tweet again at any moment. The only thing that has no risk is if I know exactly what Trump is going to tweet in the next coming hours. Every day I got to know what he's going to tweet. Unless you have that insider information, you can't do shit because you're trading on news. News is noise. And so that's all you can do. That's it, guys. And I don't trade on news. I told you guys. That's not a winning thing you can do. You can't beat the algorithms, and you don't have insider information. You're at a disadvantage. You can't do shit. The best you can do is play it before the news happens. I was already told you guys to get into oil in February. There were already people that were getting into oil in January and December. So all of us have already probably been selling up this move, and we're out. So you have to be in the place before the move actually happens. just like Wayne Gretzky said about like hockey, right? You're looking for where the puck is gonna go, not where it is. Right now, we're just like basically going like, okay, this makes no sense. We can't guess where the puck is already by the goalie, and now we're just like everybody's like fighting and battling the puck right now. It's like, fuck this shit. I ain't playing it. I could play it for a day trade really quickly. That's what I expected on Monday. I was like, or maybe a 2-day swing, but Trump tweeted too early and it fucked it up. If he waited a few hours, hell, man, that would have been a great trade. But so it's over now. I don't know what to do about GDXU. I can't tell you to do anything, honestly, because that's just a guess, and that's just playing with the casino. And I don't want to play with the casino. I only play with the casino when the bets, the odds are in my favor. If the odds are no longer in my favor, I don't want to be there. So if you're in cash, stay in cash. Basically bonds. Get your 5% interest. It's really not worth doing anything else. Are you sick? No, I'm not sick. I'm just Keno Casino. No, not Keno's Casino. Anyhow. Anything else? No, nothing else here. The bond market here with the 3-month to 2-year curve is still down. Okay. And so if it stays this way into April and May, there's probably a bigger crash coming. So if there is a crash that happens in the next 2 weeks, I expect it will be very fast and very quick. We'll bounce right away. If it's a permanent issue with the market, then that will happen probably September, October. Okay, that's the plan. And if you look at here, this is kind of what I drew. This is what I drew at the beginning of the year. I thought the market was going to do something like this. It looks like it's doing it right now. But do I think it's actually going to crash 20% from the top? Because this is where that purple line is. Well, yeah, I mean, it's possible. If it does do that, however, I would take your cash and buy everything you can see. It's going to be like April again right here. It's going to be like April again. It'll be very quick, and we'll bounce out of it. But that's not going to be... That doesn't mean that it's going to ride up like April, where we just went pretty well into October. I think what you're going to see is like it's going to go up, but it's not going to go up as high like it bounced from the low of April into October here on the S&P. It's going to drop. It's going to pop up quick, but it's just going to... I think we're just going to go sideways. So this is what's going to happen. I'm going to show an image here. So I showed this from those guys at Wyckoff Analytics, and I showed their presentation at the end of one of those streams I did recently. So it's going to look like this. Okay. So let me take off the banner here. This is what they think it's going to look like, and I'm starting to say like I'm feeling like it's going to do this more likely. It's not going to be like April going into October last year. It's going to be like, okay, we drop, we bounce, but then we're just going to zigzag, 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 zigzag. It's going to be hell. It's not going to be easy like in April. April was no brainer. You buy it and then you hold it. But here, I don't think that's going to happen this time around. We're going to drop and then we're just going to zigzag. We're going to have a pump, but it's just going to go back to where we were before the crash. And then we're just going to crash again in October, September, October. So, yeah, maybe it's going to look like this. This is essentially what it looked like in 2015. So between 2014 to 2016, we have a 2015 type market. Okay, well, that sucked. 2015 really sucked for investing. That's definitely true. So it looks like that's what's going to happen. Unless you're in oil. Maybe if you're in oil, that'll be fine. Okay? Oil is fine. But everything else is shit. So, yeah. I don't know, man. We'll have to see. All right, 10 minutes till the close. I guess we're down 0.36% at 6,556.76 in the S&P 500. So 9 minutes till the close now. All right. Okay. So let me play this video for you. I want to see what Samantha says. I think Samantha doesn't believe any of this stuff. She basically thinks we're going to taco. Or not taco.
From my...
So she basically thinks we're not going to have a taco.
That he... The reason for the bounce, and I'm looking for the Truth Social post that Trump basically used to trigger the algos. In a nutshell, he says he's going to delay all of that bombing activity threat that he imposed Saturday at 7:33 p.m. That would have kicked off tonight at 7:33 p.m. Eastern Standard Time. Anyway, he says we're going to expand 5 days out. We're going to give it a break, whatever. We're not going to bomb their energy grid. So I just wanted to remind that we are definitely on a key level of support. I wrote about that, talked about that a lot. So 6,500 generally, 6,508 specifically for SPX. And then he comes out with the policy intervention fake news, meaning he talks about, they're talking with Iran. Iran quickly, the foreign minister quickly shot back and said, no, we're not. There have been no direct communications with Trump. And he made up the entire thing. That's what they said. Iran's position remains unchanged. Hormuz remains closed to Iran's enemies. So it's ironic. We really needed this key bond and market support to hold. And then he enters this just this morning 5-day policy intervention. And the futures market kind of smelled it. It was only down 1% last night. Obviously, it's a farce. Obviously, it triggers algos. We know that instinctively. We don't have to make this up. He is not tacoing, though. There are so many bulls that really want to believe that he's tacoing. There's no bone in my body that believes that he's tacoing. Okay, moving on. The oil energy crisis and associated collateral damage to the Gulf countries, food security, fertilizers, sulfur, helium, all the same arguments that I've been writing about and talking about that makes the market even more susceptible than the 1970s is in fact what the IEA chief came out yesterday in an interview and said this crisis is worse than the two oil crises of the 1970s combined. So basically 73 and 79. Anyway, so you've got this on again, off again, constant bipolar type agent of chaos finagling by Trump constantly in the headlines, which are the tape bombs. I just don't want you to ignore the fact that this is not something that can go right back online. This is going to take 2 to 4 weeks for some facilities that have been damaged, 2 to 4 months for other facilities to be repaired and brought back online. We have a lot of fallout. So that hasn't even been priced in my firm belief. But I want to just remind this whole focus of this algo triggered pop this morning on this fake news. We know that it's a lie, but the point is what happens in 5 days kind of matters, because then that is, first of all, Israel's not going to stop bombing. Iran's not going to stop bombing just because Trump says we're not going to attack the energy grid. This is something that Trump has been aligned against Iran for decades. For decades. This is not going to be a taco. So this is a slew of threats that are maybe little pinged or peppered here and there with some benevolent dictator type retreats, but they're not taco. This is something he has been talking about, taking an obsession with Carg Island for 40 years. So he's been doing this anger trip on Iran for Israel for decades. This is a great Bloomberg article that you can read. It's open, free, gifted, whatever you want to call it. And all of this, even invasion in Carg Island, which freaks the oil market out for all kinds of good reasons, taking even more oil off online potentially because it's so hard to win, it still won't solve Trump's oil problem. So it's an excellent article. And then I can show you the money trail of why he's not going to taco. So I don't want to negate the fact that we have a technical bounce, but strategically nothing has changed. This to me is sizing up a big old market top in progress. I talked about that last week, specifically for the underlying liquidity, for semis, and for gold. So I had Dan grab that up, and there's a video that I did specifically captured from the trading room that highlights that. Anyway, this is important. Trump says no strikes on power plants for the next 5 days. He doesn't say the war is over, only that the escalation threat that he did this weekend is delayed. So that's all. Pace yourself. This is not done. Trump's not done. And I love this comment. It was actually, I'm taking it. And I told him I was going to take it. It was a longtime follower gave me this and said, hey, when you decide to kick a hornet's nest, you don't get to decide when it's over. They do. So I did a quick one just to let you know. Now let's go look at the heat map this morning. Do you remember last week I said, don't be surprised if we have some bounce, because look at the dollar. The dollar is coming in right here to this trend line. And this is the day, obviously, that it's happening. But we have a little bit of a support, I would say a lot of support on this 2 hour coming in to about 99, let's call it. All right, so on Q almost, this is dumping, that's the dollar. And this is getting supported right here at this 41.60 for gold. Little bounce, very little bounce. I have big concerns about gold, by the way. I also have big concerns about the market, by the way. And then you have this kinetic, algo-driven, pre-market extravaganza of a bounce in Qs and SPY. So this is on a 2 hour heat map because that's just how I like to do it. Dollar coming back into 99 and then maybe an overshoot to 98 and change. We'll see what happens. A temporary bounce, which would also be supportive of the end of month flows into April Fools and Easter weekend and start of Passover and I don't know what, full moon. Okay, so one thing I want to highlight though, very important. This is not a surprise from the algos, not a surprise, not a surprise, not a surprise. But what's the 10-year yield doing? All eyes on that prize. So, you know, this inverse head and shoulder, I said we're going to go up to 4.3, come back to 4.2. It held. And all I need for the end of month to be uber bullish yields, end of month, by the way, it's only the 23rd. End of month is 4.33. If we close above 4.33, we're going to see 4.86 soon after. All right, so here is the 50 week, this yellow. I'm on a weekly, daily, and an hourly. Then how many levels of support right here? 4. Not 1, not 2, not 3, but 4. The Bollinger Band, Keltner Band, the channel, the 50 week and a monthly support, which is why I had 6508 for this potential bounce. So we needed a ceasefire headline and we got it. We got it this morning. Can I project when Trump is going to do anything he's going to do? But I do project that he's going to continue doing what he has been doing. So anyway, this is a bounce. Can we get up there? I mean, I talked about this exactly last week. It would be awesome if we actually had some follow through. So remember, this is the 10, this is the 21 week EMA, and they've already rolled over. The trend is broken, it's busted, it's done. Selling really started on March 3rd. We had a reflexive bounce. We still closed exactly on my 66.30. We had a reflexive bounce. We still closed exactly there, 65.06, but you get the idea. Look at this support. All right, so what's the 200-day doing? Flattening. It's been ascending, and now we could gyrate here before it rolls over. So I'm still big bear, big picture, but I'm not averse to right tail risk, which I also talked about. There it is. All right, so right tail, by the way, they've been saying by the whole time, right tail, and it hasn't been working. So sell puts, all the way down to 6,500. Now at 6,500, we're bouncing. You've got Friday that marks the March options expiration, removing almost $4 trillion in notional open interest from the market. So that's the other kind of torque. That's the torque. It's moved off the boards. Gamma should give the index more room to move and create the potential for a new trend to emerge, although which direction it takes remains less clear. So that's their estimation. All right, so that's exactly where we're headed right now. 66.66, my original number, roll over, then overshoot. All right, so SPX 66.66 with an overshoot to 67.18. That is exactly where Gamma's headed. 66.66 is this purple line, and then 67.18 is basically right here-ish, top of the Bollinger Band on the hourly. This is the market overview for spot Gamma, much better, implied all that, the hedge wall. So yes, this is a much, much better resource, Spot Gamma, for the market data. This, again, this bounce is not done until the dollar has come back in. I don't know if you heard that this morning, but that is absolutely my contention. The dollar is coming back in. I got it on 2 hour. This is support area. Let's call. We'll see what it does here, but my thinking is it would kind of come up, back up. If it breaks here, it's going to go all the way back down to that 98 area, and the market would move higher. So I would wait until the dollar settles. Like I said this morning, the bounce is in play until this dollar stops falling. Also, yields coming back into 4.33, but I don't care about today. I care about that holding end of the month. So this is all Trump algo put covering. I'm talking about this week, 6,500 to 6,700. That is your channel where this can get into for sure. 67.18 is exactly where I would expect this to get tagged with those puts monetized. And then they roll into that. If we get above 67.18, it can get chased higher. We're not there yet. Nope, we're not there yet. You can have a.
All right. So, all right, sorry about that. Hold up. Okay, here we go. So yeah, that's who it is. Get the QR code. All right, that's it. I already talked about her enough. Yeah, well, you know, Eric, yeah, that's just how it is. Freaking taco, yeah, you got tacoed, bitch. But you got tacoed at the beginning. You got tacoed before the market opened. You should have saw that. If you want, you could have traded that for sure. Like, you got tacoed out. I'll tell you, you got tacoed. Shit, man, you got taco, man. Taco. All right, market's closed now. So, I got. Let's see. Well, I started re-entering my SOXS, so I'm shorting semiconductors again up here. I'm not too confident in that. I just used the profit I made off of GDXU, so I only made like 10% off of this, right? And so very weak. I could have got like 60% if Trump didn't taco before the market opened. As far as UwU, yeah, you know what? You could have bought it at the open here. You could have held it. You could have sold it yesterday for 10%. You could have made the same profit that I made in GDXU, or you could have risked and held it, because for some reason today they pumped it again. There really wasn't anything to talk about today, and it seemed to coincide with the fall in FDN, so communication services stocks. So for some reason, this not FDN, not FedEx. Come on, FDN. Like, yeah. For some reason, this went down at the same time. What does taco mean, bro? You don't know what taco means? If you're in trading, it means Trump always chickens out. So whatever Trump says he's gonna do, he won't do it, and that's where you bet against him, because that's how you trade Trump. Every time Trump says tariff, you buy, and then he gets off the tariffs. I mean, that's the reason I went to SOXL, okay? SOXL was because China tariffs were the biggest tariffs out of all the tariffs in April. So at this point in time, Trump was doing what? 100 something to 200% tariffs, depending on what type of Chinese good it was. I think Chinese electric cars were 200%. Some other stuff was down to 150. Some other stuff was 100%. So roughly like between 100 to 200%, there were a lot of tariffs on China. And we have a lot of sanctions on selling China, such as semiconductors. So semiconductors would have recovered the best when Trump tacos. When Trump tacos, you get the best moves. That's basically what happens. So that's what. Hey, what's up, Elbows? So this is what taco means. Trump always chickens out. However, as we're seeing now, I think Trump wants the taco out of Iran, but he might be screwed at this point because the Iranians are the ones that are going to tell him when he can taco. So the ball is in Iran's court and Israel's court as well. As we've seen, Israel launches strikes even when Trump tacos. Trump did the taco tweet 4 a.m. my time, which is 7 a.m. Eastern. And Israel, right after the taco tweet, started bombing Iran again. So it doesn't really, because right now the control is whatever Bibi Netanyahu does and whatever the supreme leader, whoever that could possibly be. I have no idea. So how about that $1 billion oil dump 15 minutes before taco? This was I don't know anything about the crude oil. There were a lot of speculations about that. There were a lot of people buying before the taco as well. You saw like some kind of spike here. So somebody was doing something probably around here. So yeah, they probably already knew. But then that's probably Jared Kushner and his friends. I'm not Jared Kushner. I'm not his friend. He didn't text me before Trump tacos, okay? So don't ask me for that information. I'm not in the inner circle, so I can't help you with that. But it didn't matter, right? Because like, let's say you have UwU right here. Even after the taco, oil still dumped, right? Because oil was like oil was already down a lot. So let me go back to that. So this is US crude oil. So it didn't matter about the taco. Oil was still down at $85, $89, $90. All right. So what you gonna do about that? What's good about that is the fact that oil stocks did not drop as much as it could have, right? You see here on XOP, we only dropped down to 171 right at the moving average. If you look at XLE, we dropped below the moving average but quickly recovered. So that gives me a lot of confidence that this has a lot of staying power with oil. That's why I said UwU. If I only had to buy one thing, I would have bought UwU, right? And now I'm saying to tell you to buy NRGU with a little bit of gush. So 1/3 gush and 2/3 NRGU. If you look at this like as a whole, the outperformance of NRGU and gush right now is really good, really nice, really nice. This is for the longer term. But if you got in late, because I told you guys to get in February, okay? So February is down here, like right early February, right late January into early February. That weekend, I said, I think we got to get into like bro, right? That you got 75% on UwU. You got like over 100% on NRGU. You got, come on, like this is what I expected to happen without the whole Iran shit. So we already got here. We're done. Okay, we're done. How long you tend to? I was intending to hold until 2027, late 2027, October, November. But we already hit the first target. This is the first target was 100% on UwU. We got 75% in 2 months. I would say right now it's really hard for me to tell you guys to buy this crap, right? Because this is not the place to be buying it. You should have bought it here, not here. This is just for traders. Anybody that traded yesterday into today, you win. You got 20%. Good job. I only got 10% from my Gold U because Trump tacoed too early. If I would have got 60% if he tacoed later on gold mining leverage. Fuck, man. But anyway, yeah, you can't do nothing about it. It's all tweets. Tweet here, tweet there. You can't do that. All I can do is tell you this is the right place to buy, the right time to buy, the right price to buy because of such and such, not because of news that's coming out right now. Whatever's happening right now is just like an added bonus. An added bonus. Okay? Because we got here earlier than expected, which means like you can take profit earlier than expected and wait for the next wave. It comes in waves. The next wave will be around. I discussed it yesterday. What did I say? I said like what? June, July into August will be the next move up. Because whatever is happening now is the end of the first move. This is not how it's supposed to be. You gotta take your profits now. But if you're doing a quick trade like 1 to 2 days, yeah, sure, you can trade this 20% here. Maybe this will go back down, take another 20% the next couple days. I don't know, but yeah, you're gambling essentially. I pretty much do not advocate for that. But long term, yeah, 2027, December. So October, November, December, somewhere around there will be the top. Can you spot? So you spot on the top of the mix and still think a weekend dump is imminent. So this is a problem. He deliberately set the deadline 5 days after his last tweet. That's Saturday. 7 a.m. Eastern. We can't trade on a Saturday. Futures aren't open. Market ain't the normal market ain't open. You can't do overnight trading. You're fucked. You're basically betting on. He deliberately sets the tacos when you can't trade. Like what the fuck? So that's it, man. Marines arrive Friday too. Yeah. So I don't know. You guys can bet on this as you wish. I don't care. I'm not betting on that. I gave you the trade on Friday to bet in oil. I did not. I don't know how to trade, like to tell you like when he's gonna tweet this and that. I don't know that stuff. So I made my money. I don't care. I'm out. I don't want to guess where oil is going anymore. This is insanity, right? I already have it. So I'm done. Baby. I'm done. Anyhow. Yeah. So he definitely deliberately timed it that way. And yeah, I guess the USS Tripoli will be there, and we'll see what happens over the weekend. So if you think he's gonna taco over the weekend, you know what? Buy more oil, GDXU, I guess, because I think GDXU is the best trade vehicle to make when you think he's gonna taco. So yeah. Anyhow, very good. So yeah, so I told you what to do over the weekend. It was correct. However, he ruined it for anybody that only trades during the normal market hours. If you did have overnight trading, you could have gotten oil U. Not oil U, GDXU, at the nice price of $120 or whatever it was. It was $120. Yeah. So yeah, you could have had a potential if he didn't taco, or if you could trade overnight. This is what you would have done. You would have got GDXU somewhere here, maybe 120. How about here? And you would have got 30%. You would have got a 30% move on that GDXU. Of course, if you did options, you have no choice. I think he tacoed about 1 hour before the options market opens for most brokers, so that wouldn't have helped you either. He purposely picked that time, 2 hours before the market opened. So yeah, you would have been shit out of luck unless you traded futures or had overnight access. This is way waste of time right there. The fact that the internet knows when Marines arrive, that can't be good. Probably not real news. Yeah, yeah. I think that's yeah. It's just yeah. So I mean, the thing is like right now, the internet, you can track anything with satellites. So most people right now, um, they just go on go on Google Earth or some other service, and then they can just see what the fuck's going on or something. But in any case, I'm not gonna tell you. I'm not gonna tell you what it is. I think the easy money has been made. Okay, everything now, right now, is just day trading or swing trading, very quick moves here and there. I am looking at Korea, however. So Korea dropped again. It pumped on the taco. It dumped after the taco. It's very volatile. So if Korea actually gets pretty cheap, I would say the risk reward looks very good. I might recommend getting into KORU sometime down the line. So maybe in a month's time, if Korea keeps bleeding off like it is now, if the stock market bleeds off in the US and the international stocks follow because of the strong dollar, uh, that means Korea's stocks will be relatively a lot cheaper than US stocks after this bleed off. And you could trade it for a very quick bounce. Okay, so KORU might be even better than trading GDXU at some point. So if you're looking for another trade, Korea might be the place to trade it. All right. Okay. So yeah, let's look at Israel. Israel stocks are still doing good. I think. Yeah, they're still going sideways. So Israeli stocks are still okay. I don't know. I know some of you are looking into buying some Israeli um, stocks. What's one of them called? Elbit or something? Elbit? Elbit Systems? This guy? This guy that went up 100% already from September or some shit? Yeah, I think so. Right? Yeah. This thing basically went up 100%. So even before the war started, like this Israeli military industrial complex stock has been doing quite well, selling a lot of drones and a lot of stuff like that. Not bad, huh? So we've got tracking numbers on marine shipment delivery. Shake my head. Yeah, I do vanilla. I missed the boat though. Yeah. So yeah, whenever I say something, you gotta buy it at that time. So when I do the boomer stocks this week, what I'm gonna do is like I'm planning for the drop in the coming 2 weeks, and I'm telling you guys if the stock market starts sliding uncontrollably, then I would be looking to buy this stock, this stock, this stock, this stock, this stock at certain prices. What I'm really interested is in lithium right now, lithium stock. So SGML, you see here, it has earnings next week. And if the market is sliding next week, if the earnings are bad, if this thing, well, the earnings reaction, it doesn't mean quote unquote the earnings are bad. It's that like people who bought here at the top at 15, they're wanting to get the fuck out. So if this thing does slide back somehow to $7, oh yeah, this is a good buy. Oh yeah. So this is my favorite lithium stock right here. LAC or LAR. Okay, LAR. LAR already reported earnings this week and Monday, and it popped. It popped, but that's not going to stop it from sliding down with the market. The whole market tanks. So if this thing just slides back down to $5-6, yeah, get LAR. So this is what I'm going to be looking for. Okay, that's what I'm going to be looking for. Drop the link to your channel. I'm streaming on my channel. I multi-stream. So this is give crack to me. Like, you don't know me already? I'm the guy that told you to buy Palantir at $20. I'm the guy that told you to buy TMC at like $2, $1, $2 before it shot up to like $10. I'm that guy. I told you to buy those things. Shit. You guys don't know me already? You have a huge list of things? Yeah, I have a huge list too. I know. It's going to be really annoying because I have to manage this myself, right? I don't have a team of fuckers working for me. I'm not Samantha LeDuc. I don't have people to help me. Help me! Whatever. I mean, one of these days it's just like, yeah, we're just going to do some work with AI and stuff. I mean, the thing is right now, everything's changing and in flux because of all this Iran shit. So once I get that done, that's it. I just put it in Substack, and you can see, boom. This is what I'm looking at. This is where it's gonna be. I'm gonna buy, and then the whole Ripple. What the fuck? The crypto move should have happened last summer. What the fuck? It's over, bro. Crypto has a set cycle. If it didn't happen already, we're done. Like, you can trade crypto right now because, like, when you can get a big move in Bitcoin back to like 90, maybe 100 at best. But I don't know how that's going to affect Ripple. All right. Ripple, if you're just buying Ripple because like you want some kind of an anonymity in your whole crypto transactions, fine. But if you're using it for an investment, I don't know. You got to pick a better time. We're in bear market season for crypto right now. Crypto has very defined bull market seasons, bear market seasons. They designed it that way. You have a halving season on fucking crypto. They designed it that way. It's very easy. You can trade this. There's a 200-day cycle on Bitcoin. That there's a 200-day cycle, meaning there's a 3-cycle bear market, so 3 times 200 bear market, and then a 5 times 200-day bull market. Okay, 200-day cycle, 3 times 200, 3 cycles of bear market, 5 cycles of bull market. The bull market's already done. If you had a bull market on crypto, it should have happened from here to here. So 2023 into 2025. That's over with. And Bitcoin only got up to 120, 130. It's over. And then it's been falling off ever since. It can bounce, right? This has been setting up for a bounce into 80, 90, maybe even 100K. But after that, it's going to drop again into late 2026. So, yeah, all you can do is trade right now. Anything long-term, like if you're holding for 2 years, 3 years, you should have bought when Sam Bankman-Fried got put into prison. Sam Bankman-Fried right here, right? Sam Bankman-Fried got called out for his shenanigans. We had the drop here. You could have made some money here. Yeah, you would have got like crypto miners, like Hut. That's the one I got in. So if you got in early, you would have got in $4. It went up to 50 eventually last year. If you got in later, let's say you got in around $10, maybe around here in 2025, April, right? The April drop, you would have got up to 50. So you would have made a 5x or a 10x. That's it, right there. That would have been easy to do right there. Yeah, I know Zephyr. I know all the little mining stocks and whatever. They moved on. They moved on to AI though. A lot of these stocks have moved on to AI. So CLSK, yeah, whatever. They moved moved on to AI. But like you can see, like some of these haven't even recovered. Hut's still holding. Hut was the one I was really confident in holding because they're moving on to AI and stuff, and Trump's son is in it. So this is kind of like where you go like, oh, Trump's son is in it? Oh, okay, well, I'll just pick this one then. This thing might be able to pump some more sometime down the road. All right? So, yeah, I'm still watching Hut. Anyhow. So let's look at the semiconductors again. Let me refresh your memory. Here, this is where we are at in semiconductors. So I said I shorted up here, but I'm not very confident. I just took whatever profit I made on gold mining stocks on Monday and just put it there. Not confident at all. I could definitely see it move up to 350 on SOXX, so that would hurt me if I'm in SOXS. All right. I could probably tolerate a little loss here if it goes down to 35, but not much. I'm really not really interested in it, but in case we do drop eventually next week, I do want to have some exposure on shorting semiconductors because why? Because Micron was the last semiconductor to report. Micron is the #1 factor in semiconductors right now. It's the largest exposure in the SOXX ETF. After Micron, you have NVIDIA, AMD, Broadcom, you have AMAT, Applied Materials, LRCX, you have CLAC, okay, you have ASML. So these here on this list here, on the right, you see, I'm highlighting, those are the ones that are affecting it. Now, if we look at the other boys, so outside of Micron, we have SanDisk, we have Western Digital, we have Seagate. The memory disk makers are kind of like controlling how semiconductors is really moving. Now we have semiconductors adjacent. These are not in semiconductors, but like I said, well, except for Teradyne and air testing. I'm ignoring that right now, but we have the optoelectronics, so lasers and circuits that have to deal with connectivity that goes into data centers. So cables, interconnects, glass. So I picked the top 4. Lumentum, LITE, Ciena. Ciena is basically the MVP right now. Ciena has been recovering since the earnings. It crapped out on earnings. The Iran war kind of like accelerated that move, but it recovered. Bump. So it recovered quite nicely. So Ciena, which was recently added back into S&P 500, I don't remember when it got added back to the S&P 500. I'm assuming it was added somewhere back here. Okay, and maybe it was this huge volume spike. It's probably this huge volume spike. So if you see this huge volume, I draw the bar chart. It's a fat candle. So this was Ciena. This probably is where it got added back to the S&P 500. But okay, so we got Ciena, and then yeah, you got Teradyne, and Teradyne also an MVP. Very good earnings. So Teradyne. But outside of this, it's like if you look at the rest of the semiconductors, there's not much going on, right? So Applied Materials goes down, goes back up. Not really much going on though. If it rolls over, it's going to be bad. And then we have to look at Micron, and we're going like, wait a minute, what's this, bro? So you got earnings last week. You have very high volume, and now you're below that volume control area. If we drop below 330-ish, I would be very worried because usually memory stocks go up and then they go down like a spike because memory stocks are essentially the commodities of the semiconductors. Memory is a commodity, all right? DRAM has its own market price. So if this thing just jumps up and down, that's not good for the rest of the semiconductors because it tells you ahead of time that the rest of the semiconductors is going to have a bad year. So Let me now talk about cyclical versus secular trend, because I mentioned that last stream. We're up in the hour. We're up in 1 hour right now. Okay, so let me see if I can talk about this. So, let me talk about this. Okay, so I did the Google thing. So here we go. AI. This is what the AI result gave me. Secular trends are long-term structural shifts lasting decades, 10 to 40 plus years, driven by fundamental changes such as technology or demographics. So, before we had a secular trend in semiconductors relied on cyclical patterns to make money. Intel and Microsoft made an agreement. They're like, Microsoft, every time you release a new set of Windows operating systems, I release a set of chips to work operating systems. So Intel can make money by selling a new Pentium chip to you every time at the same moment that they have a new Windows update, right? So every time Windows went from Windows XP to Windows whatever, Windows Vista, and you have different flavors of Windows NT or whatever, Microsoft and Intel would collude. They would collude. They are basically a gangster. They would make you buy that chip just to perform well with the latest operating system. That's how they worked. And this would create a cyclical pattern. It would have a sine wave based on that. But then what happened was Apple came around and Apple said, I'm going to create a smartphone. So after Apple came around, semiconductors kind of revolved around when Apple would make a new iPhone. Every time there was an iPhone 1, iPhone 3, iPhone 5, you would have a cyclical pattern in the semiconductor stocks based on the iPhone. iPhone was very dominant at that time. They dominated the whole supply chain. So that was Tim Cook. Tim Cook was picked by Steve Jobs to handle supply chains. That's why you always see Tim Cook going to China all the time. Tim Cook has a better relationship with the Chinese government than anyone in the US government because of that. He made a lot of networks in the Chinese just to build the factories and support the iPhone. So for a time, we went with iPhones. So iPhones were the cyclical moment. But then something changed once we had social media. Social media started kicking off, and then software was driving the hardware at that point a lot more strongly. And we had a vast array of software and people using it for the apps, right? So, and then you have to build the infrastructure for those apps. So then you had cloud software people. So all this stuff started changing the shape of how this moved. Semiconductors stopped being cyclical. They started being more secular. So that's the difference between a secular and cyclical trend, okay? So conversely, cyclical trends are short-term, recurring economic fluctuations months to years. And these economic fluctuations were due to Intel, Microsoft, and then later iPhones. All right? But right now, the broader definition is it's tied to business cycles, okay? So secular moves define the overall direction, while cyclical moves occur within that larger trend. So you can look at this plot right here. I think this is a very baby plot, a very infantile plot, but it gives you the idea. There is a secular trend, which is larger, has a longer frequency. Basically, if you draw this secular trend out, it probably is another sine wave, but it's at a lower frequency. The cyclical pattern is much faster. It influences things at a quicker rate, all right? I think one example of a secular trend is the 40-year bond bull market. I've been mentioning that too. Secular trend spans generations, the 40-year bond bull market, 1982 to 2020, while secular trends are shorter and faster moving. So This is why you have to be careful right now. We are an inflection on the bull market because the bull market was driven by low interest rates. We are at a point where we do not have globalization. We're going to have probably very high inflation for longer. High meaning like anything above 2% that the Fed target is 2%. Probably going to have 3 to 6% inflation for the next coming years, maybe decades. We are shifting away from globalization. Globalization allowed us to have this nice bull market, and then now you're just coming up to AI, and you're hoping that AI will offset the inflationary effect of higher food prices, higher energy prices, higher commodity prices overall, because lithium is dominated by Chinese. Australia right now is begging China to give it some oil because not essentially oil, but petrol, because Australia for some reason gave up the refining processes, so they can't refine crude oil. They go to China for that. So China controls the crude plus the products that comes out of crude. So your KY jelly. So if you're in freaking Australia, good luck. You need some motor oil, huh? You need some of that motor oil here for your freaking oil, yeah, right there. Lubricant, no, that comes from China too. So you gave up your stuff, I guess because of green energy. I don't know why you did that. Okay, fine, whatever you guys did, but now you're begging China to give you that shit. You guys thought you could control them with the coal, but I guess that was a bad gambit, huh? You denied them some coal, but then they'll deny you your petroleum products because you guys somehow shut down your refineries. Okay, so that's really what's going to happen, and right now. Okay, so I'm going to show the chart, and then we're going to go to these articles here. We're going to talk about the permanent inflationary effect that's happening, that's going on. So first, let's review what we talked about. Cyclical and inflationary stuff here. All right, change the movement. All right. So let me get back to this MU chart, and like we have the weekly. Okay, let me go back. So what did I draw this orange and green lines for here? What are these? These are TSMC and NVIDIA. Now, for the most part, Micron, NVIDIA, and TSMC move together, right? But there are moments when they don't, like here. This one's a really good example. 2012 through 2016, the Micron overperformed the rest of semiconductors and then underperformed after. I remember this time because I was in MU between 2011 and 2015 before it started dropping even more. So 2011 to 2015. So you can see I captured most of this move up here on Micron at that time. If you look at NVIDIA or TSMC, so NVIDIA down here in the green, TSMC, they didn't really have this kind of bubble shape, sine wave, or whatever you want to call this, up and down move. So a lot of this had to do with cyclical movements. Okay, cyclical movements. But once it's done with that, it follows back with NVIDIA and TSMC. So there is something larger here, right? Especially after 2015. You see, this is when the social media stuff started taking over. A lot of data center, a lot of cloud. So the demand for that outweighed whatever cyclical move it had here. Micron can have sharp peaks and drops. Like in a .com. Now, right now, we have a very sharp peak. Very sharp peak. If you catch the move up and down correctly, you can make a lot of money because it exaggerates the move that you're seeing. It really does exaggerate that move. So once you take away the secular move up, right? So the secular move up was because of social media, then infrastructure, cloud infrastructure, and now AI combined. And once you take that away, then you go back to the original secular movement, right? iPhone refreshes, PC refreshes, all that good stuff. This is why I'm worried. Like, I have to be very careful right now. You have a really large volume on Micron. You have this drop. It makes me feel like, yeah, this. If Micron drops below 330, that might tell you the future of how the rest of the semiconductors are going to go. I think like this kind of tells you the end of a big move, okay, in the secular market for semiconductors. Everybody AI will drive it further along the way into the next decade. But if the economy is moving down and spending for infrastructure starts going down, then yeah, I would have to be quite worried about 2027 into 2032. That's where the bear market for real estate will start happening in the cycle terms. So, and we are predicting an inflationary move into 2027 too. And that might cause the recession to happen as well. Unemployment also will rise. So there's a lot of things telling us that starting from 2027, going into 2028, 2029, 2030, things are not looking good. Okay, and this is a prelude for it. If Micron has this like bubble move where it shoots up like this, can't hold, and starts dropping right back down. Yeah, I don't think I'm gonna be like that. So that's something to watch. Definitely something to watch. All right. Okay. Anything else? Yeah, I saw one of you guys like Slick Rick talk about AOI. AOI to me is like a trading stock. I don't know. I'm not touching this shit. I touched it when I started learning about trading back in 2016, but I ain't touching this shit now. Good luck. But yeah, there's a huge amounts of volume because of this, right? From earnings on. It's just like, okay, you can go up, and if you could withstand going up and down 20% every week, yeah, good luck with that too. But I don't know. I'm trying to keep healthy here, not get overly concerned about this. Okay, 1 hour 15 minutes. So let's get to the article. Finally, we get to the article. Okay, let me close all this stuff up, free up some memory. Okay. All right. So this Russell Clark, a macro guy, he was very bullish on inflation. And being bullish on inflation, he decided to make a pair trade. A pair trade is when you have one item you go long and one item you go short. So he went long gold and short bonds. I think this is correct, but right now, gold is dropping a lot harder than bonds, so it's not really working right now. So let me read what he says. So there's two articles. Okay, let me see. Which one was the previous? Okay, I guess I'll have to read this one first. This was March 19th. Okay, let me read this one first. Okay. This was war, gold over bonds, 30-year bonds, TLT. What is it good for? Absolutely nothing. when I first started looking at the gold to TLT trade, so this is a pair trade, long gold, short, long bonds. So TLT is long bonds. It's 30-year bonds. It's the longest bond you could have. I really like the long-term graph. It suggested as some point, I guess this is at some point, a crisis would send gold to the moon and treasuries into a tailspin. The peak in the late 1970s was around the time of the second oil shock. Foolishly, I had assumed war in Iran and a spike in oil prices would provide the same type. Oh man, yeah, he's really got to proofread this stuff. Type of move. On the contrary, gold to TLT is going to be down 9% this month when the U.S. opens, and nearly 12% from the highs seen in January. I am surprised by this and trying to work out what this means. So this is why I don't like the macro people too much. They kind of focus too much on the story. If you look at the technicals with gold and bonds, it's like I like the story, but the current situation with gold and bonds is a bit more nuanced, right? So that's kind of makes it an issue here. Macro guys always want a nice clean story. In reality, it's not. There's a lot of trading going on that skews certain realities of how it looks like. A weak gold price could make sense if short-end bond yields in the U.S. were soaring higher. They have had a plenty small move so far and nothing like we were seeing in the late 1970s. So he's basically saying, well, bond yields aren't going that high, not like 1970. So like, what's up with this? Maybe it's just gold has done so well it needs to take a breather. Probably a lot of people trading gold through the paper markets and inflating the price quicker than it should. And the shock of war meant that trend-following funds degross, which leads to gold selling. This is possible. Another possible macro reason is that surging oil prices will reduce the buying power of China. That's true as well. It also will hurt like gold and silver miners, as we've seen. Energy costs are rising. So, of course, you would think that would help gold go up by itself, but there's a lot of other factors. So buying power of China, definitely an important thing to consider. We also have war around the Persian Gulf. So the UAE, those guys love to buy a lot of gold. The UAE is a big contributor to the gold market, and their gold market has been in trouble since the Strait of Hormuz got closed and people are afraid to travel to Dubai. That will cause its trade surplus to shrink, reducing the need for China to buy gold. The problem with that is back in 2022, spiking oil and gas prices did nothing much to reduce the trade surplus then. Energy prices would need to go much higher for this to come into play. So he's still thinking that like natural gas, gold, oil, and coal prices, I guess, really aren't at a level that should cause this. The best reason I can come up with for the failure of gold to TLT trade to perform during the Iran war is that soaring energy prices have much obviously affected Europe and Japan more than the US, which has led to dollar strength. In 2025 and nearly 2026, short US dollars seem like a slam dunk trade, with President Trump demanding it and also attacking the Federal Reserve. This was a very popular trade. In mid-2025, according to CtC data, so that's the Commodities Trade Commission, okay, the market had never been longer yen than at that time. With the euro, CtC data still points to long position that has not washed out yet. So he's again saying like, what the fuck? People are going long the yen and euro, so why would the dollar be this strong? Most currency traders are a version of tomorrow will look like today, and with the euro only just breaking through its 200 moving day average, trend following strategies will be selling euro positions aggressively now. That is, weak dollar trades will be getting replaced with strong dollar trades now. Obviously bad for gold and other similar trades. So he's again essentially saying that these traders, these algo traders who follow trends, are essentially switching over from yen and euro going to the dollar and making the dollar even stronger than it should be. The big question is, will 2026 look like 2022 when Russia turned off the taps? Tricky, as most of the Middle East wants to sell its oil and gas, but they are being stopped by Iran. Back in 2022, both Russia and Europe knew the relationship was over. Is this going to be the same? Can Iran indefinitely stop the oil and gas trade? Politics would suggest not, but as the US and Israel kill more Iranian leaders, I wonder if there is, okay, this is THERE, not THEIR, is if there is still a political infrastructure that can actually cut a deal in Iran anymore. Against that, the temptation for a ceasefire to cool prices and allow for a possible uprising in Iran must also be a factor in political calculations. It is easy to see gold and TLT as a weak dollar trade, although at its heart it is not the way I understand it. I see gold to TLT as the breakdown of the US-led economic system. So I think long term, I agree. Yeah, I agree that I think the US is at its peak. We are on the downward move. Gold over TLT will work out, but it might just not work out in a straight line. So that's why when you look at Samantha LeDuc, right, she told you, I believe the dollar is going to go down in later 2026. But in the meantime, dollar is going to go up. She said this before all the Iran stuff happened. So to me, if I was a rich person, I didn't have time to look at all this stuff, and I wanted someone to help manage my portfolio, I would probably go to Samantha and let her take care of my money for me. Honestly, I think overall of all the people, she has a very holistic way of looking at the markets. The people like this, Russell Clark here, they're very narrow-minded. They only look at a certain time frame. Long term, this might work out, but this is probably a 40-year trade. A lot of people, you know, there's ups and downs in that 40 years. I recommend you want someone who has a kind of multi-time frame view of the world. Looking at it like this is more like Warren Buffett style. Okay, we are in a world where things change very quickly. It's very dynamic. You have Trump tweets. You have people going all over the place, blah, blah, blahing. Rumors are being spread at a wild pace with social media. These things are now algorithm trading, which has very large effects, which he mentions here. So the algorithms are set to trade based on trend. So before they were long yen, long euro, and now they're switching over to long dollars, short yen, short euro. So if you're living in a different world, I think you need the tools for the job for that world. And that's why I recommend you guys, you know, don't be blinded. Don't be having your blind on. You need to be very dynamic, very nimble. People like this is a dying breed. They are from the old time, the dinosaur time. You have to understand cycles now. Okay, this is what's important. Not following some thesis. This is fine if you can make a PhD, but it's not okay if you want to make a trade on the short term. This will work out probably in 40 years time, but it might not 100% work out within 10 or 20 years. There'll be ups and downs where this works, and when it doesn't work. Okay, anyhow, do I want to read the rest of this? No, I don't think I need to. All right, let's do the next one. Okay, so here we go. So is this a cope post? Gold and TLT is actually doing what it was supposed to do. Timing is a bit annoying, but the strategy is valid. So I guess this is some cope right here. Since I first came up with gold versus TLT, it's having its first meaningful drawdown. To be fair, it has been on a blistering run. So, okay, let's see how he's coping about this. The idea behind gold over TLT was that we are in a rising cost of capital world. Of capital. Okay, rising cost of capital world. So this is inflation, right? Not because things are bad, but conversely because things are good. Governments are focused on demand management, full unemployment, and rising wages. This means systemic inflation will be much higher going forward, unless central banks stop being the natural-born losers they have become in recent years and raise interest rates to keep asset prices in check. In 2022, central banks grew a pair, and declining asset prices checked rising inflation. But since then, they have been returning to tight and have been desperate to cut interest rates. Intellectually, central banks are trapped in a world that no longer exists, but politically, they are on the hook for the inflation that current policy settings are producing. Okay, so now he's just blaming the central banks for being pussies. Okay, all right, so this is the cope. All right. The market has been clearly telling them that the world has changed. 30-year JGB, so Japanese government bonds, have continually sold off. But central bankers, like many fund managers, are very keen on back testing. That is, they only want to do what worked in the past, so are reluctant to raise interest rates. The gold part of gold to TLT was meant to capture this reluctance, which it has done. It seemed to me that if the market started to think central bankers were not totally useless, we would begin to see gold outperform equities. And starting in 2025, that has been the case. Plainly, the much tighter energy market is causing the market to price in much tighter monetary policy. Yeah, that's true. If there is a problem with gold to TLT, it is that the TLT side, US 30 years, have been in a range for 3 years now. This should be surging higher in my view. So, okay. So you're saying like the U.S. central bank should be tightening right now? Yeah, sure. I could probably agree with that, but they won't. Jerome Powell didn't do it. So you can make an argument that surging oil prices will lead to central banks tightening, and we then get a recession. This is what happened back in 2007, for example. In that case, you want to sell gold and equities and be long bonds, but taking a look, come on, man. Taking a look at UK 10-year gilts and JGBs, so the UK 10-year bond treasury, essentially government bonds, okay? So this is the sovereign bonds, right? And the Japanese sovereign bonds. The market is pretty clearly saying that politics will likely lead to government spending what they can. Clearly, that is what's happened during COVID and the energy shock of 2022, and what the voting public expect. It is also my expectation. For me, gold over TLT trade still looks good. It just looks more likely the negative side of this trade needs to give more. That is weak equities and bonds. I suspect that is coming. Just a bit of sequencing issue. So, okay, even with the gold going down, he's saying like the bond should have taken care of that. So that's what the pair trade means. Pair trade meaning like he's long gold, short bond. So if gold is weak right now, the short bond side should take care of that and reduce the loss he's having, because that's what pair trade's supposed to do. All right, so I don't know. You gotta look up pair trade. I'm not gonna get into that right now. That is pair trades. Okay. All right, let's see. I want to talk about semiconductor chemicals and other things, but let me look at the top performing tickers. Okay, so I am going back to talking about some charts right now. Let's do the top performing tickers first. So let me kick up everything. Let me see if I got a video to play. So take a little break here. I'm going to introduce you to the Shape Store. The Shape Store. What is the Shape Store?
Man, I got like 8 of these little new shapes.
Theatrics.
The Shape Store is a liminal space, a purgatory for black people. This tweet, which attached this video, has approximately a 10-paragraph essay on what this video means to him. And it's effectively the ideal world for African Americans, he says. Now, why he says that, I'll leave up to your interpretation. There are some more Shape Store videos I can play. Let's check this out.
Man, I got circles, I got pentagons, I got octagons. Where the triangle at, man? Hold on, look, I found it. I found the triangle, dog. I done found the triangle, Dan. This is the one right here. Look at it. Bright yellow. Triangle.
Triangle. Look how...
Over 500,000 of y'all.
Now this one, this is also like AI. I thought this one was real. I thought this video was real when I saw it. I did, even though it says AI isolation, it got me. I didn't know what the this was. I thought it was real.
Over 500,000 of y'all motherfuckers pulled up to grab some shapes yesterday, and now I'm backed up with 8 million orders. To show my gratitude, I just opened this new little online website. Pull up to the shop and grab some shapes at infinitearchive.net. It's the same shape, same price. Look, $5 for the blind box right here.
I think there's another one where he shows his way. Oh, this one. And so there's like continuity. I'm like, he's showing his shapes.
Hey man, just opened my new little shop in the neighborhood. This right here, the Shape Store. We got everything in here, man. Hexagons, octagons, pentagons, septagons, all that. Squares, circles, whatever shape you need, I got it. Ain't nobody else got no Shape Store like this.
I thought my first impression as someone like an old person being exposed to television and radio for the first time was I thought that this was the original video. You know, this guy owned like some sort of carpentry store just based off like what was in the background and his old ass TV. He's like, okay, so this guy lives inner city. He's got this super old ass computer that's like his checkout system, and he's a carpenter. And he got bored one day and he's like, I'm gonna open the Shape Store, and he just recorded this video as like a joke. And then I thought everything else after it was like fake, you know, like it was like AI memes about the Shape Store or people pretending to be like super hyped up by the shapes. And then I looked into it and no, it's this guy. Oh wait, that's the wrong tab. It's this guy's weird ass essay about the Shape Store. And this was the original video. And this is like a follow up to that original video. So it was very profound to me. I had a boomer moment where I was trying to decipher what the I was looking at, because honestly these two videos in particular, these look real. This looks like a black guy like doing like a skit. The most suspicious thing about this black guy showing off his shapes is the fact he says septagon. Septagon broke literally. Ironically, when I watched this, I'm like, septagon, that's a fancy word. It's a $2 word right there. So that honestly, that broke my suspension of disbelief more than anything else in the video that was actually in the video. But I through sheer force of will, through multiple repeat watches, and through glancing over every other word in this long ass tweet that I closed for the second time, I have deduced that no, this is like a avant-garde AI creation. Okay.
All right, guys. You are introduced to the Shape Store. All right, so if you guys are interested, let me give you a link to the Shape Store. see what's up here. Let me get you a link. Even loads. Come on. Come on. All right. Okay. All right. So, this is the Shape Store. The Shape Store. So go to that tweet. Right there. That's it. That is where all the AI generated Shape Store videos are created. I have no clue who this guy is, why he decided to make this AI generated Shape Store. Is this a parody? What the fuck is going on? But what's even more fascinating is this other guy. This other guy wrote a huge ass essay about the Shape Store. And I'm just like, what the fuck? Someone spent time to analyze this as a serious critique or philosophical debate on the Shape Store? Yes, there's another tweet right here. That's the link. Okay, so let me read some of it for you guys. Okay, let me get rid of this shit. Okay. So this is from Scorched Earth Policy. Handle on Twitter X SCEARPO. And then the Shape Store is Falconry Finance. UAE Exotic Falconry and Finance. Our firm provides Falcon-based securities for large institutional clients and sovereign funds. And somehow this thing makes a video about the Shape Store. So, yeah, okay. Alrighty. Whatever, guy. So I can look them up. And you can find the Shape Store. Okay? You can find the Shape Store. So let me read this essay for you. Or at least a few paragraphs. The Shape Store is the afterlife for black people. It represents the bacchanalian tempest of chaos that stirs in their hearts. It is neither heaven nor hell, but a tense purgatory of motion, wonder, violence, and colors. The Shape Store is what they grasp for while alive. The Shape Store represents the platonic perfection of consumer indulgence that fulfills the black impulse for status hierarchy. The absurdity of the premise highlights the purposelessness, I guess, purposeless trinketry. All right, purposeless trinketry. I guess that's not a word. In the shoes, chains, and clothes they steal, harm, and kill for. At a macro scale, there is functionally no difference between a limited edition pair of Jordans and a green rhombus made of plastic. The Shape Store is perpetually in a nighttime urban liminal space beyond the corporate McDonald's play pit funhouse aesthetics. Everything is lit with the hostile comfort of street lamps and concrete. The sky is a kindred darkness, beckoning ancient memories of African dirt, finally cooling to a reasonable temperature in the dead of night. The Shape Store embraces incoherent traffic from clown vehicles. You can go to Jeff Vanderloo in St. Louis right now and find at least 3 black men stuffing themselves into toddler car frames with lawnmower engines zooting around at 30 miles per hour. Walks in streets like roadblocks, NPCs. A ghetto rig solution to suspended driver's license becomes a hidden portal into a childlike whimsical sensation that only Miata owners could ever hope to come close to in the civilized dimension. The tender succulence is immortalized in Black Afterlife, a world where the joy of vehicles is divorced from the risk and mental anguish of navigating rules or considerations that traffic normally invokes. All right, that's the shape store, guys. That is the shape store. Okay. All right. Okay. Before I continue, I have a special presentation. So I was watching this before I came on here. So this is last minute insertion. Okay, we are going to discuss some cycles right now. This is from the Foundation of the Study of Cycles.
Hello again, everybody. Dr. Richard Smith here with the Foundation for the Study of Cycles and Cycles TV. So welcome back, everybody. Good to have you with us again this week. Lots going on in the world. The fourth turning is here, as Neil Howe would say. May you live in interesting times. So much going on. I started to talk last time we were together about the unbelievable research capabilities that are being unlocked by these new tools. And I'm going to continue with that this week. It's really incredible, exciting, mind-blowing stuff. So lots to talk about. I'm also going to just briefly take a look at markets and what's going on in markets, especially.
So this is going to be very academic. It probably will bore you to tears, I guess. But for those of you who are nerds and you really want to understand the mechanics of how you analyze cycles, this will be interesting. Okay, so I'm going to go forward a bit.
To kind of take the
So let me see.
Conflict data, tendencies, and then we can all copper and crude oil.
Dang, actually, I think I downloaded the wrong video.
Remember that one on.
Hold up. So yeah, I think I downloaded the wrong thing. So hold off on it. Let me see. Let me double check. Okay, yeah, I downloaded the wrong one. I mean, it's very recent though, so I don't know if I could get it up here. So we're gonna have to see if I can do this while I'm still streaming. So hold up. Okay, so in the meantime, let's go back to, because I think it's very important what we're gonna discuss right now later on with the cycles. But let me look at some charts for you, because these are the stocks I'm really liking. So LNG is Cheniere Energy. Now they have some ports in Louisiana for liquefied natural gas. They're also trying to open up some more ports. Corpus Christi in Texas. Okay. They already got the permits for it from Trump. And very recently, since the Hormuz crisis has begun, it's been moving nicely up, and we are at a long-term point here where we're breaking out. This is really nice. So this is probably one of the stocks. So we'll look at the monthly here. Yeah, we're at a pretty much a new high. I don't think we've gotten this high. So we broke out of the 1979 high back in 2021. So the Ukraine war, thanks Ukraine war. And now we're making looks like an attempt at creating a new trend up. So if you bought this in COVID, right, $32, it went up to $168. We've been pretty much going sideways since the Ukraine, okay? And then now, since December, it looks like we want to get higher. This thing can move quite a bit, okay? So if you remember from time we had George Bush and all this stuff, you could see during the early days, back at 50 cents to $30, you can see it can move quite rapidly up and down. And then it started moving again in 2011. So with the Europeans begging for natural gas, this could be the start of a bigger move. So yeah, the move from COVID to the Ukraine war was just an appetizer. This might be the stock to be really eyeing up and down as the way to move forward. Okay, so this one is one of them, LNG, Cheniere Energy. And then we have another one, VG. Okay, Venture Global. They recently had an IPO, the same area that LNG does business in. So I've been watching this. It's down, up, not hit much history in its stock. So it's not really easy to understand how this is gonna go in the future, just based on charts. But I think this could be a big play, right? It's relatively new stock. People might start getting more and more interested once they realize, wait a minute, you have a stock now? Yeah. If Cheniere is going up, why not this one? This could be like another multi-bagger right here. So VG, Venture Global, right? This is one that you might want to look at as well. Okay, another one on the list. I think I mentioned this before. This is probably part of the boomer stock list here. Equinor. So this thing, I believe when the last time I looked at this stock, they do transportation of oil and natural gas and all that stuff. So there's basically a transportation service stock. So not directly using pipelines, okay? So Cheniere and Venture Global, they're more like pipelines. This thing is more shipping. So this is kind of more of a risk, because since they require boats to push their goods around. But so far they've been going up in January. And then once the Iran war kicked up, they got a lot bigger, okay? So we got some action there. And right now we're at the top of the Ukraine war, right back as ever back 2022. So we are right back there. So I'm going to be watching this too as well. This thing could be breaking out sometime soon. So that's another one. EQ and Nor. Okay. Let's see what else we got. The nuclear and other energy infrastructure stock, General Electric, Vernova, which split off from GE, and since then it's been doing quite well. It looks like since earnings, I said, this looks like great boomer stock, and it's still doing well. So even after this little hiccup at the start of the war, it's recovered and now starting to break out as well. And a lot of these Europeans, they're going to look back at nuclear energy. So there you go, another one. How about this? So GEV. Okay, let's see. TTE Total Energies. I think this one is also like a combination of Cheniere, Equinor. So they have kind of the same thing. It's been breaking out, I think. I don't believe it's ever reached this high before. I don't think so. No. Okay, nope. So if you look back at maybe the 2000s into now, we've been a sideways range, and this is a huge breakout of TTE from 67 and last several weeks. Okay, so 3 to 4 weeks, I guess, finally break out. So TTE is now on my list. TTE is now on my list as well. Total Energies. Okay. And then we also talked about LAR. So 2 lithium LAR. Lithium Argentina. Okay. Looks like very good since earnings on Monday. And SGML looks like pulling back. Okay, right here. This looks like a good area. If it goes down to 7, definitely a buy. If it zigzags to $9 or $8, still a buy. But even if you wait until it breaks back above 10 completely, that's still a buy. So anything between $7 and $15 is a buy for SGML for me. Most broadly, the materials sector around June, July, August. I think there will be a bottom sometime in that area. So if this Iran war kicks up and materials keep sinking, then that's where I will be buying at. Okay, that's it. All right, let me see if I can download this right now. See if it's possible, if I can get it. Okay. I'm going to interrupt my talk. Let's see if this is going to interrupt my internet here because I'm using the bandwidth to download. The upload speed shouldn't be an issue. Okay, let's see how quickly I can get this. Okay, maybe about 15 minutes I can get it. All right. So that's good. Okay. So there's no lag so far. The last one too, I talked about till. Till, I said, yeah, grains. Okay, so wheat, corn, soybeans, and cane sugar is till. The till ETF, TIL. So we're going to have to look more carefully and see if this is going to be the one to get. There was a lot of volume last week. Somebody looks like they wanted to do something here, even though till didn't move anywhere. Yeah, we're going to have food inflation, guys. So till, TILL, this I might add to the boomer stock. It doesn't have a K1 tax form, so that's going to be very easy to plug in with your 1099, because if you have a K1, you have to adjust everything on your 1099 when you get a K1 form. So a lot of the ETFs that track silver, gold futures, natural gas futures, oil futures, and gasoline futures, and corn, soy, cane, sugar cane, all those will be affected. So this is another thing. The other one that does not do a K1 is the PDBA. So Patrick Donald Bravo Alpha ETF. The problem with this one is that it has pork, so it has lean hogs, cattle, it has cocoa, chocolate isn't doing well. So it has a lot of stuff that you might not want in an ETF. But if you want a broader exposure to multiple areas of commodities and food products, then yeah, PDBA, the Invesco Agriculture Commodity Strategies. Maybe you want this, but I think till was a better one because I'm only looking at the grains to go up right now. I have no idea about the beef and the pork and the chicken and the eggs. I don't got time for that shit. Come on. Okay. The other ones to look at. I mentioned this a couple weeks ago by now. CF, CF is my favorite fertilizer stock. It broke out of the Ukraine high here already. Okay, so we broke out of 107 essentially, and then we're now above 120. We're dancing above it. So CF is my favorite. There are other ones like LXU, IPI. Maybe there are maybes, but CF is probably the one I'll focus on. We have other more like well-known names like Archer Daniels Midlands Company. This is way more boomer because they have more exposure to other chemicals. Okay, these are chemical companies, but I think CF benefits the most from the fertilizer stuff, and it's a large cap company. It's not a scary one, okay, to be in. Once it breaks out of this level, it's a good sign. It's a good sign we're going to keep going up. So anyhow, okay, looking at the after hours, I see oil down, SOXX going up. So it looks like maybe somebody tweeted something. So let's get that going while I download this. So did anybody tweet anything while we're gone? It looks like the NASDAQ is trying to peak, or at least was trying to peak out of here. We'll see how it goes tomorrow. But yeah, so you've got to assume that potentially the NASDAQ or the S&P can go up to 6,700. But that's not my prediction, honestly. Okay, we're done downloading. All right, let's go. Let's go, guys. Time to play this video.
Hello, everybody, and welcome to this very special presentation. Let's, as we're all welcoming you in, let's see who's here. Just pop in where you're from in the text box, and there's some well-known names already. Robert McGill there.
All righty, so good. It's working. Didn't NVIDIA CEO Jensen Huang say they had AGI already? So they have artificial general intelligence. I mean, I don't know, man. This shit's going crazy. I think they're gonna. I mean, even after that, all the AI stocks went down anyway. So I don't get it. What the fuck's going on here? I don't know what's going on. I'm not even gonna try to keep up with the quote unquote news because I think it's all noise, and the truth will reveal itself in the coming 2 weeks. And I'm not going to bother paying attention closely to it. I'm just going to bide my time, be patient, wait for the right prices to hit, and I'll go.
There's a name from the past we haven't spoken for a good 50.
Very well. Also,
all right, let's go forward.
Data 1750 to 19. Raymond Wheeler. Dominant.
The next thing is that you wouldn't tell me anymore because you said if you wanted.
Very well. Also in markets, etc. So. Yeah, excited to share it with everybody and excited to share it with you because I know, you are a student of history and
that's why I'm so excited.
Appreciate and I'm interested in what you think of all this.
Well, and also chip in everybody here as well because I do not know what's coming up. I mean, I was just given a brief glimpse and it was kind of like, hey, let's put this out to everybody. Why keep it amongst ourselves? And the next thing is that you wouldn't tell me anymore because you said if you want it to go out to everybody, you got to listen in. So that's a sure way of getting me here. So Richard, I am excited. Let's go for it. Tell us what you got to tell us.
Let's go. Well, let me just make sure I got everything in place here. So,
well, whilst you bring that up, one of the things is the Masters Working Group. We meet every couple of weeks, and I know they've had a little bit of a sneak preview, and they've also been adding to this. So I think this is very exciting. And so, Richard, you've got the first slide there.
So I'm going to just go through my slides. And as usual, I got a lot of slides. So, again, forgive me if I go fast through some of this. This is, again, a work in progress. I'm excited about it. I think it's pretty compelling. And I will be covering this in much more depth at the conference in New York. So, So the cycles of war, obviously an important topic, not just to us today because of current events, but it was an important topic to Dewey. I mean, as you look through the archives, you see this as really one of the dominant themes of his work. And I guess it shouldn't be surprising, right? He lived through World War I and World War II. And so much of what Dewey, why he did the work he did and why he started the foundation was to try to help us avoid the kind of calamities that he experienced in his lifetime. Of course, he started the foundation after trying to understand what caused the Depression. Didn't know that World War II was coming, started the foundation in 1941. So cycles of war was a very important topic to Dewey. It's a very important topic in the history of the foundation. And oops, sorry, getting ahead of myself. So a lot of Dewey's work was based on the work of Raymond Wheeler from the University of Kansas. And he put together a massive, really insane data set of 2,500 years of collecting the battles in the history of the world and then, ranking them 1, 2, or 3 and adding them up over, going back to 600 BC. So this is Raymond Wheeler standing in front of his famous big book, which I have a picture of myself standing in front of it in New York City at last year's conference at the Baruch College Library of Technical Analysis. So this was actually something that was in the possession of the foundation for many years, and it still exists today. And that is clearly a labor of love there, right? And then here's
it's quite a stunning book, isn't it? It's just worth mentioning that book because we did go down there and spend 2 or 3 hours with Mr. Roth down there, who kindly greeted us and showed us around. And the Wheeler's work is just incredible. But look, sorry, I'm interrupting you. Carry on, please.
I mean, here's Dewey with his fellow founders, the director of the Harvard College Observatory, Yale University professor of geography, Ellsworth Huntington. He was also at the Matamek conference with Copley Amory, who was the organizer of the Matamek conference on cycles in wildlife biology. And you name it, the secretary of the Smithsonian, Charles Greeley Abbott, who was very interested in sunspots and solar cycles, Wesley Clare Mitchell, the founder of the National Bureau of Economic Research, one of the preeminent economic think tanks still today, the chairman for the Institute of Advanced Study at Princeton, right? Einstein's home. So all of these people were seriously interested in cycles enough to be on the, founders of the Foundation for the Study of Cycles. So this is kind of serious. And this is just a couple of pages from the paper in the archives that really started me digging deeper into the archives. Dewey talking about a 54-year cycle across 35 different phenomena, shipbuilding, wheat prices, number 3 here, international war battles, that's some of the wheat, et cetera, tree rings, sunspots, British consuls, bond yields, et cetera. And Dewey claimed that many of these cycles were all peaking around the same time. And this was 1917, 1971, 2025. So this started me saying, what is Dewey doing here? How did he do this, right? What was he working on? And that's what the capability to do this is a big part of what has really been unlocked by these new language models that we have access today that we never had access to before. And even, the agentic tools to be able to go out and find some of these historical data sources and build databases, which is what I've started to do, of these data sources to see if we can reproduce some of Dewey's results.
So Richard, just for those who are new to this, just on that previous slide there, you say there are peaks every 54 years. Just explain what that means. Are we seeing an extreme in that activity? What are we seeing every 54 years? Just for the people who are new. I know we've got some real hardened cycles people here.
Well,
And,
that's kind of what I'm going to get into.
Sorry.
What did he mean, right? Because one of the things that I want to talk about, Andy, or that I'm discovering is that
54 years. Just explain what that means. Are we seeing an extreme in that activity? What are we seeing at every 54 years? Just for the people who are new. I know we've got some real hardened cycles people here.
Well, that's kind of what I'm going to get into.
Sorry.
What did he mean, right? Because one of the things that I want to talk about, Andy, or that I'm discovering is that Dewey was really doing a different kind of cycles analysis than what most of us are doing today. And I'm going to get into that a little bit as the presentation goes along. So maybe hold that question and come back to it. So this is just a little chart of some of Wheeler's war data, 1750 to 1953. You have kind of international battles along the top and Civil War battles along the bottom, and kind of climate eras, warm, cold, warm, cold, warm, cold. So this is just the kind of work that Wheeler was doing, in the age before computers, before this could all be done by the machines, so to speak. So just really incredible efforts, Herculean efforts that were made by people like Wheeler and Dewey, who really still don't have, I think, the recognition that they deserve today. So 1964 is when Dewey put together this book here, the 17.7-year cycle in war, based on Wheeler's data, 600 BC to 1957. Okay. So this is what rigorous cycle work looked like before the age of computers. And this is really, Andy, what, I still attribute to why I'm, running the foundation today, is because I looked in the file cabinets like 15 years ago that were sitting in Palm Springs, and I said, this work looks incredible. Like, what is this doing here, right? Like this level of care and love, the thousands of pages of handwritten calculations like this is actually Dewey's work calculating the data that went into that very report that I just showed you. So I just thought this was amazing. He's doing the 11-year moving average here from a 23-year moving average, all on Wheeler's counts, 1920 right here, 21, 22, 23, 1925. These are the counts. These are the derivations, all the stuff that we do at the click of a button right now, right? But he's got to do it all by hand and check it off with the pencils. So in particular, his 17.7-year cycle, right, in war cycles, these were the peaks and that he predicted back in 1964. Okay. All based on, Wheeler's data stopped in 1957. And that's when, Dewey did his work about he published it in 1964. And if you add 17 years to the crests, 17.7 years, these are the dates that you get. And it's roughly 18 years. And when you add 18 years to 2007, Andy, we get 2025, right?
Right. Mm-hmm. Yeah.
Which also lines up with the kind of longer 54-year cycle, which he also had cresting in 2025. So these are some new data sources. I'll be talking about these in a little bit, but these are, I mentioned Wheeler's data stopped in 1957. It was actually extended to 1989 by Stephen Bush, who worked at the foundation, was one of the researchers. I think he might have even been director for a period of time. And he extended Wheeler's data to 1989. And it took him 20 hours of research for every year of data that he aggregated, which is incredible, right? So 30 years of data, 32 years, that's over 700 hours of work to add data from 1957 to 1989. But these are different data sources. These are modern data sources. I'm going to cover them briefly. But these were roughly the peaks that Dewey had predicted, plus or minus 2 years. And these are the best data sources that I could find today that gave me something analogous to what Wheeler was doing. So it's not the exact same methodology that Wheeler did, but these are some modern data sources on battle deaths by year. And, I think it's not bad, right? You can see 1971, certainly there was a peak there. I'm sure you could tell me what was happening in 1971. What was that? Vietnam, Korea?
Vietnam, there were issues in the Gulf and also Indo-Pakistan War and so on. Yeah.
And 1989, clearly, we didn't hit the peak exactly, but definitely declining after then, right? 2007 seems kind of like a low, but maybe our wars migrated into the financial world in 2007. And he also studied an 8.5 year, half that cycle length as well, right? And you can see that kind of middle point too in the data here, and now here at 2025. Again, these were forecasted in 1964. These aren't the exact phases. We know when we do cycles analysis today, phasing does shift over time. Cycles are dynamic, but still, I thought this was pretty interesting going back to a forecast made in 1964. So does history have rhythm? Is there a clock inside human conflict? Let's dig a little deeper. So again, the foundation of this work is Wheeler's 2,500 year data set, 25, almost 2,600 years, dating back to 600 BC, up through 1989, brought current to that level by Stephen Bush, and I think with help from Richard Mogi. And he weighted each battle by severity, 1, 2, or 3, and then he just added up the numbers for each year. An incredible data set. And as far as I can tell, Andy, this was published by the foundation. Mm-hmm. The foundation published this data for Wheeler in not Cycles magazine. There was actually a journal of Cycles research that is different than Cycles magazine, that was more tailored at academics. So that was very interesting to find in the archives. Going to be digging into that some more. And here's just kind of a picture of the counts by year going back to 1989, right? Of course, you can see some trending going up, and I would, say this is more likely, higher population, but also more visibility into history, right? and World War II over here just kind of dwarfing everybody else. I had to actually put this on a log scale because if I didn't, World War II would make everything look irrelevant. And right. This was Dewey living through World War II here as well. So then to follow up on Dewey's and Wheeler's work, I've been digging around and I've found these other contemporary, not all of them are still current, but they're significant data sets on war and conflict. This one's called Correlates of War, and it dates back to 1823 to 2003. That's the coverage of it. So this is a data set that I've been working with. This one is the PRIO battle-related deaths, covers 1946 to 2008. You see 1971 here, right? 1953 about here. This was part of the slide that I showed earlier, where I kind of linked a couple of data sets together, this one and then this one, the UCDB Uppsala Conflict Data Project, Uppsala Conflict Data Project. I think it's in Europe somewhere.
Sweden, yeah.
Still current through 2024. So this is real data, right? Analyzed with modern methods of Fourier transforms, statistical significance through the Bartel's test, etc. So we have the Wheeler combined data back to 600 BC. We have the Correlates of War data set from 1816 to 2014. And we have the PRIO and the UCDP data sets from 1946 to 2025.
If we can go back to that UCDP, the PRIO set, what's that peak we're seeing there? Is that 2023?
And I think this is the Ukraine war, right?
Yeah, yeah. Okay.
Yep.
Right. Right.
So this is a lot of work, right? To find these data sources, to get them into a database that we can work with, and to do the analysis to look for the cycles. So, back in 1960.
All right, this is the most important part. We're going to take all this data and we're going to put it into a computer. And now we're going to let us analyze it. AI, human, whatever. Can you help me predict the future? Can you predict the future? If you can do that, you can make money.
64, Dewey was doing it by hand, basically kind of just folding over every 17.7 years, lining up the data points and, penciling in the cycles, right? I think the fast Fourier transform hadn't even been developed in 1964. James Vaux, also one of the most important people in the history of the Foundation, developed a Fortran program not too long afterwards in 1965 to start to apply computers to cycle analysis. I mentioned Stephen Bush extending the work to 1989, and then today we have our cycle analyzer, which they would, our predecessors would be besides themselves if they saw what we could do today, right? So let's get into the meat of what I've found so far, right? So, and this gets at your question that you brought up earlier, Andy. What's Dewey doing when he's saying, they're every 54 years, there are these cycles lining up, right? So most of the time today, cycles analysis is kind of a part of technical analysis, right? Because markets are very dominant in our lives today. And there's a lot of market analysis. And we're always really looking at a single data series, right? And we want to know what the strongest cycles are in that data series, because we don't want to trade weak cycles. We want or in there what Dewey was doing, and that's what I've really found by going deeper into Dewey's work. Through this, I was able to scan this using computer vision techniques and extract all of Wheeler's data and recreate all of Dewey's analysis using these new tools, right? And so I actually have been able to recreate his work and understand better what it was he was doing. And he was really looking for, does the same rhythm appear independently across unrelated phenomena? So he wasn't looking for the strongest cycle in every single data set. He was looking across data sets to see what cycles the data sets had in common across different phenomena. That was what his signal was of, this is an important cycle. So this was one of the things that I had to adjust in my cycle analysis, is to allow for cycles that aren't, that are weaker, that might not pass the filters of the strongest cycles, but still have a statistically significant presence in the data. And then when you look at that same cycle appearing in many different data sets, right? Some highly significant, some less significant, that is what Dewey really regarded as a signal. So does that make sense? Are you following me so far, what I'm saying?
Yes, I think so. Just let us know in the chat there, how are we doing so far? This is quite fascinating stuff. So, yeah, carry on. Tell us a bit more, Richard.
So we're going to get into, mostly focused on the conflict data here, but I have also added to my database wheat prices, sunspot activity, commodity prices, gold prices. So I have wheat back to 1259, commodities, some other foodstuffs back to 1259. I have gold and silver back into the 1600s, sunspots back to the 1700s. So this is a serious long-term database to try to get at what do we see there in, for example, this 54-year cycle, right? So these are the most important cycles that I have validated so far. The 18-year cycle, which is what Dewey saw back in 1964 without computers. I still don't know. I don't quite understand why he identified that, because he didn't have the ability to push a button on a computer and see every cycle in the data. He had to test every cycle one by one. So why he settled on the 17.7, 18-year cycle, why that cycle has turned out to be so significant even across 20 different data sets is astonishing. So this is the Wheeler-War data, and these are Bartel's tests, okay? The 18-year cycle, the 29 to 35-year cycle as another one, and the 100-year cycle. And these all, which I know you've talked about before, Andy.
Yes, absolutely. Yeah.
These are the significance levels, right? 91 to 99% in the Wheeler-War data across 2,600 years. Sunspots, 80%. Wheat prices, 97%. Commodity index prices, 89%. So these are very statistically significant results for similar cycles across totally disparate phenomena.
Incredible.
So focusing just on the conflict data in particular, the 18-year cycle that Dewey identified, 91 to 97%, okay, showed up in the Wheeler combined data at 91%, 90% in the Wheeler International War data, and 97% in the correlates of war data set, right? Independent of Dewey and Wheeler, this is a totally different data set, 97% Bartel significance for that roughly 18-year cycle in that data set. So this is real confirmation, right? This is showing.
Yeah, I was going to say that's a very good validation indeed. Now this is fantastic, and it shows that this is still working, right? That's the key point.
Still working in a data set that Dewey never looked at, Wheeler never looked at, right? So very exciting. So these were the tests, and for this, we used our cycle analyzer from the Foundation for the Study of Cycles, which I was able to call from inside of Claude to, run the data and get the stats for me. The 18-year cycle, I showed these numbers already, but 28 to 30-year cycle, not so strong in the Wheeler combined, but very strong in the Wheeler International at 97%. This was a cycle that Richard Mogi focused on after studying the continuation of the data that Stephen Bush put together. Richard Mogi did amazing work on behalf of the foundation. This 39 to 40-year cycle showed up in the data. I haven't really explored this one yet, but 98% Bartel significance in the Wheeler combined data. And then this kind of Kondratiev linked cycle, 56 to 60 years, really showed up 94% in the correlates of war data for the 181-year data series. So these are significant, right? Real data series, real statistical significance. And these are the kind of cycle families, right, that we saw consistently across many different data sets. I have like 23, I think, long-term data series now. And these are the cycles that are showing up, weaker in some, stronger in other series, but these are the cycles that are consistently showing up, which is what Dewey regarded as signal, not noise, right? So I've talked about this a little bit already. How am I doing on time here? Pretty good.
Yeah, we're doing good. We're doing good. Yeah.
Year cycle was, across all war types. The 28 to 30-year cycle was strongest in interstate. 39 to 40-year cycle visible in the long records. These are just some things that we were able to find, that Dewey really didn't see himself necessarily. I'm really interested in this century cycle being so significant about the 100-year cycle a lot yourself, Andy. And I haven't put all of this together yet. Again, this is a work in progress. I have a chart that everybody's going to want to see. It's coming up. We're going to
we're looking forward to that. That's kind of, and hopefully that will
look at, where are we at today in the
That's
cycle?
Exactly it. So we're going to put, I'm hoping Rick is going to put all this together, bearing in mind it's work in progress. And,
yes, exactly.
but as where we're at right now, but yes, sorry, I'm interrupting.
I think it's really amazing work. So I think this is really just kind of a repeat, but these are the main cycle families, I would say, that I have found so far in the work. And I'm going to pull together a few of these here in just a minute, but these are the main cycles. So the kind of 16 to 20 year, the 18-year cycle, there's 28 to 30-year cycle, a 39 to 40-year cycle, 56 to 60-year cycle, and 85 to 100 years. And I think we've seen these a lot, Andy. You've talked about most of these at one time or another. But what I can tell you is that these are showing up consistently across a very diverse set of time series data, right? Not just stock market data, right? We know that all stocks have the stock market in common. So, what do sunspots have in common with war data and wheat prices, et cetera, right? We're still teasing that out, but these are the major
that's great.
Family groups. So just any comments on this from your perspective?
Yeah, I was going to ask you actually, just so you must have read my mind. The 100-year cycle with the analysis you're doing.
Yeah.
Have you looked? Did you say you've looked at 2,500 years worth of data on that? So we've looked at 25 cycles. So we've got a good degree of validation there, then, right?
Absolutely. Yep.
Right.
And
so I mean, the real proof
sunspot data and other data sets as well, the wheat data.
Right, but are we specific? So we're applying this across a whole series of phenomena, not just wars here. We're looking at other bits and pieces, right? Yeah. Okay, that's great. So now I understand this is work in progress, and you're up to this point now. And in fairness, we did say, come on, put this out there. And it's kind of like, if we're gonna put this out there, I'm not gonna tell you all right now. You can come and turn up. So I know this is going to be focused to a conclusion, or not a conclusion, but a significant point at the conference in May. But before we talk about that, what are you seeing so far putting all this together? Do you have any sort of predictions you're capable of, or you're coming, any conclusions you're coming to, or am I jumping ahead? Is that the chart at the end?
That is the chart coming up here. But I think before we get to that chart, I think we just wanted to tell everybody about the conference and encourage all of our wonderful members and attendees here today to join us at the conference, because this is very important work, right? This is the kind of work that...
All right, guys. So I'm going to interrupt this thing. So we know that now, I hope you believe that cycles work. Okay? I use cycles all the time. I try to figure out the trends of things. That's what I want to do. I don't have time for this noise, because apparently Trump says there's going to be a ceasefire now and this and that. I have no idea what's going on. GDXU is up 7%. So if you're still in GDXU, you got another 7%. If this holds into tomorrow, you got another gain. So I told you guys about GDXU, right? If you're in oil still, well, I guess you're going to be screwed tomorrow. Because because right now crude oil is dropping into the close of futures. So futures is going to reopen after it's open right now. Let's see. This futures, how is the futures doing on crude oil? So if all the crude oil's dropping, once again, that's it. You got Taco Tuesday. Trump always chickens out, blah, 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 la, la, la. So that's why, forget it. I ain't got time for this shit. Okay, I ain't got time for this shit. Okay, so that's why we got to worry about cycles. We got to worry about like things that can last. Okay, I think for the long term, oil and natural gas, energy, nuclear, basically, they are going to move up. And we're going to have people that want to have batteries, so lithium, all that will move up as well. But for the short term, it's just noise. It's just all noise. And I try not to trade noise. I expect noise. I can try to guess where noise might take me, and I try to trade it. And if you did, you would have got GDXU. That's the only high conviction trade right now. I did try to do a short on semiconductor at the high yesterday. It's a small position. I'll have to see if that survives tomorrow morning. But otherwise, like if you're in GDXU, yep, you got another move up, 7%. So you should be doing pretty well. So let's see what the spring breakers say about this.
You guys go to
CtC,
FAU, Sacred Heart University,
Ohio State.
Spring Break 2026. What is the game plan?
Drinking, blackout with my rack out.
If my mom is watching, I'm sorry, Mom, but I've been getting pretty drunk almost every day.
Hook up with some girls, get with as many girls as we can, and not come back with an STD.
Wake out with one person each night, that's it.
So how many guys have you made out with this week?
I've been here for about 10 days, so 10.
What were their names?
I don't remember.
Name one.
Name me one. Name me one.
What is the craziest thing you've seen at spring break?
Not that crazy. I've seen people do like cocaine off of boobs. I saw a girl like black out on the street. That was pretty exciting. Sunday mimosa drag races.
You see that guy take his pants off in the middle of the club?
There's a lot of famous people down here.
Have you seen Johnny Belisario?
What?
Never mind.
Okay.
What is the wildest thing you've done down here?
Got with somebody the first night that I came down here.
Pole dancing.
2 days ago.
Stripping naked, getting in the water. You gotta say. What'd you do? You went something crazy. On the strip? Honestly. All right, on the strip?
No, we had this.
Okay, that wasn't public, but yeah, okay, that's...
What issue facing America is the most important to you?
What bikini I'm gonna wear next? Obesity is terrible.
Ice. Not personally. I'm
This is the future, baby.
I'm legal.
Getting a tan on the beach. That's the most important thing in my life right now.
I'm thinking about Starbucks, to be honest. I'm thinking about Starbucks, what I'm gonna get for today.
The elevators don't work. You got 43 floors. The elevators don't work.
I could take this little glass of water, drop it in the magnets. That's the end of the elevator.
You heard that Donald Trump has been doing recently?
Gulf of America. That's the last thing I kept up with.
We're going to war with Iraq. That's been crazy.
What do you do in Colombia? You got Maduro.
Yeah, war with Iraq. Yeah, Iraq, right?
That done.
He's like trying to sue those people for making jokes about him.
600 times!
You must be happy.
I'm very happy.
The Ayatollah's dead.
I'm so, what? Who? What? What is that?
Who the is Ayatollah?
I've never heard that word in my life.
Lewis, what's Ayatollah?
I haven't heard. I found out about Chuck Norris yesterday. That was more devastating to me.
He was the supreme leader of Iran.
He's dead?
We killed him.
You did? You killed him?
Johnny.
Whoa! If you were in charge, how would you take on Iran?
Yeah, all my girls and we would all start putting belts on them.
We get a bunch of girls in bikinis, we make them run across the battlefield. All the guys are distracted, we all run in.
Look at him in his eyes, I guess. Flirt with him.
I'd blow him up.
I don't know enough about it, but I would probably wipe it out.
Drop a bomb, baby. Bomb the out of him.
I would bomb the out of him.
What have you heard about Venezuela?
Venezuela? Nothing.
I'm not sure.
I barely know what'll be going on in like Tennessee where I'm from.
That they beat us in the World Baseball Classic?
Have you heard anything else?
No.
Nothing. I haven't heard nothing about Venezuela.
You know, honestly, I don't know and I don't care.
Where is Venezuela?
I don't know. I'm drunk. I don't know. Venezuela? Isn't that in Spain?
No.
Go easy on the tequila.
What do you want to tell Jesse Waters? You're on his show.
That's the guy who was eating the steak, remember? It was like in front of the vegan guy.
Oh,
Jesse Waters.
Do you know who I am?
I do not.
Here's Johnny.
Hi, Johnny.
Well, whatever. I don't know. Who cares? Yeah, boy. Yeah, boy. I'm gotta go to the shape store. Get me some triangles. That's where I gotta go. I ain't gonna fucking give a shit about this shit. All right, guys. Let's continue on.
Was organized to do, right? I am literally.
All right, I got fast forward through the ad
liquidity.
here. Basically,
Tudor Jones.
I mean, if you got $1,000 to blow and you're in, I think they're gonna be in New York City, so they're gonna have a conference over there. You could like hang out with all these guys
May
up here.
30th.
So May 28th to the 30th, 2026. All these cycle guys will be there. Okay. If you're around the city, sure. You got $1,000 to blow, go ahead. Yeah, check them out. I think it will be interesting if you can hang out with these guys who are doing all this cycle research.
We've got a few seats left at the early bird.
I mean, just to talk to Jake Bernstein or what else they got? Who else they got here?
Between the pair of them.
Yeah, right there. Larry Williams, Jake Bernstein, probably the most elite traders of all time. They'll be speaking. So yeah, I don't know. Depends on your mood, right?
Where are we now? So this is the best chart I have been able to put together so far, using the most significant 3 cycle families and looking at their current phases based on using our cycle analyzer and looking at these long-term data series and getting their current phasings, okay? And this is the 16-year, right now it's about a 16-year cycle. Sometimes, cycles lengthen and shorten and their phases change. But again, this is using our most current cycles analysis methods and getting the phasing of these longer term cycles. So this is a 16-year cycle, which is the 17.7 years currently running at about 16 years, the 26 to 30 year cycle currently running at about 26 years, and then the 54 to 60 year cycle stretching out a little bit right now at 63 years. And what's particularly interesting to me is that when you put these all on the chart, they're all, other than 16 year, which is just about bottoming here, all rising together here into, the next 5 to 10 years. So again, this is preliminary work, but it kind of feels right to me. I don't know about you, Andy, but
where are you seeing that bottom? Are we seeing that 2027, 2028?
27, 28 there. Yep. And
right.
Then, with support from the longer 26 and 60 year cycles.
Right.
And if you look back to, the analysis Dewey did in 1964, right, that was forecasting a peak in 2025.
Right. That's interesting. Yeah. I mean, I have a lot to say about this, but we want to present your work. I always have a lot to say. But
all right. Well, we can have questions and Q&A afterwards, but really this is kind of the climax of my presentation of what I've done so far, which is to basically gather these 20 plus really long-term data series, gather some new conflict data series, because Wheeler stopped in 57, even though Bush extended it to 89, and analyze those and validate them against, the historic series that the foundation has identified, and put them all together to say, what are the families of cycles that are consistently showing up? And then given those families of cycles, what's happening with those cycles today? That's really what I've been doing from like 5 in the morning till 10 at night for the past month. So, and I think it's important to note, at least it's my view, that cycles are not destiny. I think Dewey saw this, and I believe it too, that an awareness of cycles helps us to navigate current events with a knowledge of history, right? To me, they describe conditions, not necessarily absolute outcomes. I believe that we have agency within the history of cycles, and knowing where we are in a cycle, right, what forces are elevated, and leaders, investors, communities who understand this can act differently than those who don't. And I think that's the real value of this work. And I'm so appreciative of our predecessors who, went to the lengths that they did to understand this. And I think we have such an incredible opportunity to bring their work back to life and back to the public again today. So, we didn't confirm a cycle, we discovered a structure. The cycles don't care whether we're ready, they run regardless. The question is whether we're paying attention. So.
Okay, so I think I'll stop there. Go to the Foundation of the Study of Cycles website or the YouTube channel here, FSC TV on YouTube. Okay, so this is where you're going to find all the videos here that I'm showing. I think what's most important is that, like, look at this quote here. Cycles are not destiny. They describe conditions, not outcomes. This is how I look at it. I saw that based on cycles, based on the conditions, I'm going to go long on oil. I have no idea what Trump is going to do. I got no insider information. I got no idea what Bibi Netanyahu is going to do. I got no insider information. I got nothing. All I can say is that, like, it's a good time to be long oil. Okay? That was it. And they're just proving me right. There's conditions for war right now. As we move along into 2027 to 2030, most likely based on the data that was given in the presentation, he gave all the presentations like war happens at this year and that year, how many people died in the war and this and that. And this was basically like people are essentially willing to fight, right? Most people have these cycles. So human nature operates on this level. It doesn't guarantee that you will fight, but it says like this is the condition where more people are going to fight than less. Okay? And that means like if I'm going to bet on war, it's going to happen during these years. And if there's an opportunity for me to go long on war, that's what's going to happen. And one of those things is energy. Energy is going to go up during war times, right? Aluminum is going to go up in war times. This is why cycles matters. If I'm going to bet on something,
I have a lot to
right here. This is it. What does this say? So he went through all that old data and he says like, well, there's something going to happen. There's a convergence going to appear around 2027 through 2032. So from 2027 to 2032, there's going to be a lot of conflict just because of human nature, just because of the sunspots, just because there's not enough food to feed people. I don't know. There's a whole lot of things that goes into a complex system as the earth, humans, animals, and plants. All these things go into effect all together. And that's why if you're going to be long war, you're going to be long war from 2027 to 2032. I'm not saying there's going to be World War III, but there could be World War III because now is the right condition to have war. If hot people want to fight, they're going to fight now more likely. It's just like when you say like, oh man, Chicago is going to have a lot of killings in the summer. Why? Because it's hot. People are going to be outside. They're going to fight. Cycles work the same way here. We have like long cycles from all throughout history. And now we're going to hit it. That's it. They should publish their... The problem is they never get funding, man. And you know why they don't get funding? This whole thing... The problem is this. If you tell people that I can predict the future, guess what? You're not going to get funded. Because the billionaires keep that information for themselves. That's the real insider trading. If you inside trade on Trump tweets, maybe you get like 1 million here and there. But if you can inside trade over decades using cycle information, you get billions, trillions. That's what it is. And what did JP Morgan say? JP Morgan had a nice quote. JP Morgan, He talked about astrology. So that's why I don't want to see this thing peer reviewed, honestly. I don't want it. Because once this gets into the public and people actually believe this stuff, it doesn't work anymore. It stops working. You influence human behavior. The only reason you have an advantage over other people, the normies, the people at that beach in spring break, so if you want to make more money than everyone else, you have to keep all those people ignorant as long as possible. The more people know about this stuff, the less it works until it doesn't work at all. Because now you influence the behavior of the humans. You influence the subject. Okay? That's really what it is. So everything I give you here, I hope, is only to a small audience. I don't want people to start believing me. Okay? Just like when I said like oil is going to go up, if people don't believe me, great. That means I know it's going to work. The more people believe me, the less likely it's going to work. Just like Palantir or whatever I said. So gold and silver, yeah, back in 2023 into 2024. Yeah, so no, I don't want people to start knowing this shit, honestly. But good luck. If you want to peer review it, good luck. I think people in the scientific community will not like this at all. They always want to know about the why, too. Why did this happen? Why did this happen? All we will care about is like we see it's happening. There's something we see that's happening. I don't really, if we want to rigorously prove it, then you have to introduce the factor of like, why is it happening? Is it because of the birth rates? Is it because of immigration? Is it because of the sex ratios? Is it because of the moon's gravitational pull? Is it because of sunspots? Dude, bro, forget it. I really don't care why it's happening. I just know it is happening. I'm going to trade what is happening. I'm going to make money on what is happening. And that's it. That's the end of it. And the more people are looking into this, I think the less and less it's going to work, because then people are going to be like, oh, wait a minute. Oh, yeah, I know that this is happening. Then I could trade differently. And it affects everything. It affects everything. Most people don't invest in markets directly, even though I don't know, man. I don't know, man. We are going to live in different times. I don't know, man. Honestly, I'd rather not let people know too much. Yeah. I mean, that's the reason why technical analysis doesn't work really anymore. When technical analysis first was introduced, it worked. And then when more and more people figured out how technical analysis could figure out the markets, it worked less and less. So in the 1970s to 1980s, you had big departments full of people looking at technical analysis. And then from then on, it doesn't work anymore, because more and more people read the books. They know the thing. That's why people go like, oh, it doesn't work. Yeah, of course it doesn't work. Too many people know about it. Shit. Damn. It doesn't work no more. So fuck it. So that's why I'm always looking for more and more obscure, harder to find information. And that's how you make money. The mark indicators are something that's like kept secret for a reason. Yeah. That's the way it is. So the mark indicators was something DeMark told people in the 70s and 80s, but he kept his like secrets hidden, right? He kept it long. Once you publish that stuff in a book, it's over. It's over. It doesn't work anymore. So, yeah. So let me see. I mean, I don't know if he like JP Morgan really said this shit, but it's always funny to point it out anyway. Yeah. So let me get the meme ready here. Yeah, but you really don't want people to know things. They'll front run everything, and then it's over. All the alchemists hid their secrets. Yeah. Of course. If everybody knew how to make gold from lead, it's over, right? I would see gold prices crashing down into the dirt here. I mean, I think a lot of things work anyway because like most people don't believe it. So, anyhow, even if you tried to tell them, they wouldn't believe it. The more you just talk about this stuff, there are people that believe it. They hide in the shade. They're quiet. And if you let too many smartasses know about it, then, slowly but surely it stops working very well, if at all. So even because I think normies will never believe it anyway. If you told them this stuff, they wouldn't believe it. So that's why they're normies. They are the mean, right? We have the bell curve. There's a reason why there's a bell curve. That's why we have Dunning-Kruger, whatever, right? That's just how it is. There are people that wouldn't, but then there are these like select people at the edges of the bell curve, and they hear this stuff and they will believe it. And then if more of those guys believe it, then it might affect things where like you can't make it work. So yeah. So for me, I just let it up to the fates to decide, right? Let God decide if you're meant to receive this information or not. They're just people that are not meant to receive it anyway. So I'm not gonna be going around being like an evangelical and try to promote the gospel of fucking cycles here. That's not my job. All right. That's why we have the foundation. The foundation can figure that out if they care to. But I am going to use it to predict and make money off of because I want to keep it easy. I don't want to be wasting my time day trading Donald Trump tweets. Okay? I don't have time for that shit. I'd rather have some nice cycles to look at and go off of that and buy and hold for 3 months or so on a big trade, and that's how it goes. But yeah, if you're in GDXU right now, you're doing good. I sold my GDXU at 10%. That was good enough for me. I got out. But if you're still holding it, you're up another 9% on GDXU. So you should be able to get a 20% by tomorrow based on Trump doing a ceasefire on Iran. I guess if that's even true, I don't know. But hell, you probably get a 20% right there. So, yeah. I just wish Trump let the market drop more into the open. I could have got GDXU at a better price. That could have been like a 90 or a 80 to 90% trade pretty easily. No problem. Damn, every search engine, the results go to Reddit. Jesus Christ. Reddit just freaking obliterates every SEO right now. Really annoying. Fucking annoying. I don't even know. How is Reddit stock even doing? Is Reddit stock even doing good? But here we go. This quote is attributed to JP Morgan. Don't know if it's true. It could be fake. Millionaires don't use astrologies. Billionaires do. I like it. I like it though. Because cycles is astrology, after all. And I believe it. I believe that the billionaires, they know this stuff, but this is why they don't support it in the public. The Foundation of the Study of Cycles is a public institution. It's just there for the people, You pay them a little membership or some donations because it got restarted. The Foundation of Study Cycles went dormant for like 20 years. People stopped caring about cycles until they brought it up. And actually, it was because of Mark Newton. Mark Newton was the one that put me up to this. Mark Newton now works for Fundstrat with Ed Lee or whatever. What's his name? Let me see. Who is in charge of Fundstrat? It's the bullish guy. It's the guy that's always bullish. Tom Lee. Yeah, okay, Tom Lee. Yeah, trading on Trump tweets is a recipe. Yeah, it is. It is. It basically is. Because unless you have insider info, you're just guessing every other hour. Like, every time the market closed, then he tweets. Just before market opens, then he tweets. He purposely tweets when, like, most people can't trade. It's just like, what the fuck are you doing, bro? It's like, this is... Forget it, man. I ain't playing your game. Then forget it. Do this. And then you're going to do a deadline on Saturday with 5 days. That means nobody can trade, essentially, unless you're in crypto. Crypto is kind of a proxy for the S&P 500, but not really perfect. So I don't know how you would trade then. Fuck that. So anyhow, yeah. So again, based on cycles, that's it. Long term. Think long term. Don't do the short term stuff. When there's a bear market, yeah, okay. If there's something I see, I'll say, like, yeah, this is short term. Do the short term. Just like GDXU. GDXU on Monday would have been great. It could have been really great if Trump didn't tweet before the market opened, before options opened, like 2 hours before everything in the early morning. It's just like, what the fuck? Dude, if you held off, could have made a lot more on GDXU. Okay? So that's what I'm saying. That all this stuff, it's a big problem. It's a big problem. All right. And we can't do anything about it. He can do whatever he wants. He's the president. So he's allowed to tweet. They gave him the free speech loophole, so he can tweet whatever he wants. Elon Musk can't do that, though. Elon Musk got slapped by the SEC. So Elon Musk doesn't have full capacity to talk about Tesla anymore, right? That he used to do. But yeah, Trump can do whatever he wants to do because he's a public figure, so in the government position. So he's allowed to tweet. So that was the ruling they gave him. So that's why he can do what he does. And I'm sure Jared Kushner is making a lot of money and his friends off of this. And you just gotta sit back and just let them take all that money for free. Too bad. Okay. All right. So what about some chemicals here? Some semiconductor gases. I think that's what I'll end it at. We got 3 hours into the stream, so let's end it at that. I have no idea who's going to stream after this. I saw Schizo's stream yesterday, so I don't know what that was about. It was just like streaming. What the hell was he streaming? He was just streaming fucking Dead Man streaming something else, right? Yeah, I don't know. Wait. So let me see what else we got here. Anything else here? Blah, 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 blah. Any other videos I want to play? Nope.
Yes.
Where are you right now?
In Mexico.
So how the hell they deport you?
Because these motherfuckers catch me when I'm driving my truck.
You were drunk?
Yeah.
Oh shit, David. God damn.
That's exactly what I'm saying.
Huh?
That's exactly what I'm saying.
And so when they caught you driving drunk, what they said, we're gonna deport you and shit?
Yeah, them motherfuckers tell me. I mean, the black dude is very good person, man. That motherfucker so smooth. But that's the one motherfuckers with the Spanish dudes, it's a piece of shit. You know?
Who? The police?
Yeah, the immigration, I see it's like 7 people.
Yeah.
One is the black dude, working for ICE, and that one dudes is a Spanish dudes, like four or five guys.
Yeah.
But these motherfuckers is from hunting. What is it called for that shit?
I don't know.
The money hunting.
Bounty hunters?
Yes.
Oh, he a bounty hunter.
Yes.
And so they would look.
All right, so you can go to John Galt's channel, The Urban Landlord, if you're not over there. So I multi-stream between my channels and John Galt's. Okay, so check.
Looking for you or just looking for anybody?
So that you can check that out. All right, so yeah, let me get the banner up here. All right, Urban Landlord. All right, multi-stream to give crack to me. GIVECRACK to me. All right, so sub to my channel just in case everything goes down. Go sub to Urban Landlord if you want to see something. I think he's gonna try to get some more IRL stuff. Let's see what's going on once we get the summer going, and that'll be good. And yeah, I don't know. We're gonna be doing some more immigration stuff, I guess. Street interviews, maybe some other things. But yeah, we'll see. But also subscribe to Be Better Network. We're gonna do some more Boit analysis content as we are in the downturn of the Thorposphere Boit. Not much going on over there. Okay. But yeah, you can go over to that area. Let me see. Let's see. Let me play this while we're waiting.
I want to say I'm alive, and you're all witnesses.
Israel, out of anger for what's taken place in the Middle East, has violently lashed out at a major facility known as the South Pars gas field in Iran. The United States knew nothing about this particular attack, and the country, Qatar, was in no way, shape, or form involved with it. Unfortunately, Iran did not know this, and thus justifiably and unfairly attacked a portion of Qatar's LNG gas facility. No more attacks will be made by Israel pertaining to this extremely important, valuable South Pars field.
Basically, for context, the United States made it clear they were not going to target Iran's energy infrastructure. Israel ignored this and carried out yet another attack. Then Iran retaliated on Qatar's own energy facilities, causing dozens of billions in damages.
Prime Minister, given the escalation of attacks on US allies across the Gulf, given the spiraling energy costs, the US service personnel killed in this war, many Americans are asking that question, whether you misled their government into starting this war, and for how long should Americans keep paying the price?
Big questions.
Well, I misled no one. As far as oil prices rising, spikes, you know what a spike is? It goes up and goes down. The Americans are working very hard to open the
Oh, you think it's just a spike, huh? You think it's just a spike? Oh, bro. I think you just shifted the whole fucking energy sector, my friend. I don't think it's just gonna go back down to $60 a barrel. I'm sorry. You just changed the whole freaking market. That doesn't work that way. Just doesn't work that way. I thought you knew that, BB. I thought you worked for Boston Consulting Group. Didn't you work for Boston Consulting Group? Come on, man. Come on. You should know better than that.
Straits. And if they succeed, then oil prices will come down. I talked to many American friends. They're not clueless. They understand this. Some don't. They said, let's stay out of this. It's not our war. It's not our problem. Maybe it's only the Jews. Have we learned nothing? Absolutely nothing in these 80 years? We cannot see the danger that...
You've also indicated today that you made a commitment to President Trump not to strike these oil and gas facilities in the future. Should President Trump come to you one day and say, oil prices are too high, it's time to end this war, will you listen to him? And
that's a good question.
Do you need the United States in order to continue this campaign?
Wow.
I don't think any two leaders have been as coordinated as President Trump and I. He's the leader. I'm his ally, the model ally.
Oh.
That's how they call it, the model ally. And against all the vilifications that are leveled at Israel, Israel is sponging off America and all that. No, it's not. Israel is
a
brave country, a
that
resolute
right?
country.
And almost like they're rage baiting. Is this the? I think this is why so many people push against the war. It's almost like they're rage baiting. Is this the? Yes.
Well, history proves that, unfortunately and unhappily, Jesus Christ has no advantage over Genghis Khan, because if you are strong enough, ruthless enough, powerful enough, evil will overcome good. So you have no choice.
The unwavering fealty to Israel. Can't you see that people are getting alienated by this?
They called Israel the model ally.
No.
That's how they call it, the model ally.
The model ally, huh? Yesterday.
No more attacks will be made by Israel pertaining to this extremely important, valuable South Pars field.
2 weeks ago.
Breaking, the U.S. is dismayed by Israel's attacks on 30 oil depots on Saturday. Wait, is this a real video?
8 months ago.
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I'd never seen before. We basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing.
Well, anyway, all right. Okay. All right, let's look at this. This is unprecedented. Short positions in Brent crude oil futures by producers, merchants, processor users are up to a record $193 billion. These are the companies that physically produce, refine, trade, and consume oil, from major producers and refineries to shipping firms and industrial users. Short positions have doubled since the start of the year. By comparison, the 2022 energy crisis peak was $155 billion. By selling futures contracts at today's prices, producers are agreeing to sell their future oil at $100+ per barrel, even if the market price falls by the time they actually pump it. This guarantees a revenue regardless of where prices go next, protecting their margins when prices normalize. Oil producers are seeing unprecedented profitability. Okay, so this means buy oil companies. Don't give a shit about where oil is going. I don't care if oil goes up or down or whatever. Chevron's making money. Exxon's making money. Fucking. What else is making money? I don't know. Those two are the big boys. Phillips 66. Who else is making money? Fuck, man. I don't care. Oil companies are making money. That's why you see when oil goes up and down now, you see the oil company stocks, they don't react that badly to it. This is a smart oil company. Oil companies are using futures to protect their profits. It doesn't matter where oil prices are going in the future right now. Sorry, BB. It's the consumer paying the gas prices at the pump are going to see those prices forever. The oil companies already locked in their profits. They use futures. They made their money. They got their money. As long as this range occurs, as long as oil stays around $70 to $90 a barrel, it's done. Oil companies are making profit. So you'll see a lot of oil companies expand. If Trump allows oil companies to drill more everywhere around the world, they'll make more money. If China stops going into deflation, they'll make money. That's it. This is what it is. The people who produce oil just bet that $193 billion, that prices are going to stay high, bigger than the entire 2022 crisis. I guess this is what someone replied. I don't know where he got that from, but it really doesn't matter. All you got to do is fuck, dude. Oil companies are now set for the next how many years, depending on how they work in the futures market. Okay. Yeah. Okay, yeah, that's it. What else we got? Let's see another tweet. I'm gonna see this tweet. How about this tweet for you guys? This is an interesting one. Magnificent 7 stocks are decoupling from the rest of the market. A 100-day correlation between the Magnificent 7 index and the S&P 500 equal weight index is down 0.727, the most negative reading since June of 2023. This means big tech and the average stock in the market are moving in opposite directions. Since 2019, the only other time this correlation was more negative was in Q1 and Q2 of 2023, when AI euphoria sent tech stocks surging 45%, while the S&P 500 only rose 7%. This dynamic has now reversed, as the Magnificent 7 has significantly underperformed the average stock over the last 3 months. So does that explain what happened this morning? I don't know, because this morning I saw all the software companies, communication services crash. I don't know on what news. And then oil companies start rising. What news? There wasn't any significant news to make either of those move that way. So is it just the fact that people are just switching over from AI stocks and going into oil right now? Is that what happened this morning? If you're doing that, it's too late. Honestly, I'm the one that's getting out of oil, right? And trying to get into AI stocks, because by the time you guys realize the trend has changed, it's probably too late. Most of the morons have come in at the wrong time, right? So let's see. Eric says oil at 88, drop, baby, drop. Yeah, see, maybe they got clowned. I don't know. This morning looked like a weird move to me. It's like, the fuck? Who the hell is selling AI stocks and going to oil now? AI stocks are cheap and oil stocks are expensive. It's like, what? What news happened this morning? I saw no tweets. Nobody tweeted anything. What the fuck is going on here? So I guess that was another trap for what happened after the close. And now oil is dropping because now we have ceasefire talk. I don't even know if it's true, right? It could change tomorrow morning anyway. None of this shit is true. It doesn't matter. All I'm telling you is, like, if you wanted to buy oil, you should have bought it in December, January, February. Not when the war started kicking up. That's too late. Once the news happened, it's too late. You're too late. So that's why I'm trying to beat into people's heads here. It's like, news is noise. News already tells you what happened in the past already. It already happened. By the time you hear it in the news, it already happened, bro. You're too late. You're trying to predict the future. If you want to make big money, you got to predict the future. Okay? This is where the cycles come in. This is what we're trying to do in this show. This is what we're trying to do in this show, man. Fuck the past. Anyway, President Trump threatens to revoke the EU's favorable access to U.S. LNG shipments. Oh, shit. So, now that Qatar is out of the picture, Trump is using U.S. liquefied natural gas to say, yo, Europe, you need a hit? You need a hit? So one of the companies I mentioned, LNG, okay? And there was other companies, right? EQNR, TTE, I talked about in this show. They ain't done going up. They're going up a lot more. And there was a huge amount of volume on LNG stock last week. And it was just like, whoa, that is the largest amount of volume for that stock in all history, I think. So let me show it to you again. All right, let me show it to you again. This is what's going to happen. This is what's going to happen. The U.S. is going to be a huge exporter of liquefied natural gas. I mean, if we can bypass Qatar, that'll be great. The U.S. LNG market is going to be huge. We finally can export all that LNG, because we go dig for oil anyway, and we get LNG as a byproduct of our oil. It's really money. Come on, guys. And so we should have that port opening in Corpus Christi, Texas, and those guys will be making buku bucks. All right, here we go. So here we are. Let me get rid of this and this. We're not talking about NVIDIA semiconductors anymore. So for a while there, right? This was the bottom and this was the top. Set in 2002 up until 2005. So this area of $38, $40, we've been dancing around it up until COVID. And then we pumped through COVID into the Ukraine-Russian event. All right. So you understand what's going on there. And then after we got through it, another range here in LNG. So this is Cheniere Energy, ticker symbol LNG. And look like the volume profile shows that the median or whatever is at $160 a share. And then since October, we've been dancing around the top of this range here. This is where the bell curve comes in. This is essentially where most of the price action happens between 209 and 123. And we've been dancing around this 210 level, right? 209, 210 level. And for the last several weeks, we've been going quite above it. And then now you see here, last week, so these are weekly candles. We see the largest volume on this stock since probably the great financial crisis. Either these guys are selling to get the fuck out, or they're just buying more stock. They're so... I mean, I've been telling people, hey, yo, this is all Trump tweet stuff. If you're a long-term person, like, I don't know what type of oil stock you're in. If you're an oil commodity, you're screwed. If you're an oil stock, you're fine, probably. Long-term, it doesn't matter. This is just noise. If you're in oil, energy, gush, WTI, any of the leverage stuff, you might be worried because leverage ETFs are not nice during volatility. If this thing starts going up and down, zigzagging on Trump, it's probably not good. I've said we're probably going to go sideways until June, August. That was my last stream. That's what I talked about. So June, July. Oh yeah, leverage. Yeah, I mean that was too delicious day to not get out. That's really good right there, because if you look at XOP is dancing at the top of its range. XOP, if you look at its history from the Great Financial Crisis until now, that's when just before the Great Financial Crisis, the XOP ETF was created. This does a oil and gas exploration, and most of the time it hung out around between 170 and 85. And recently, I guess it locked into 140. So we have been breaking out last week into this week. I probably would say I believe that it could just easily keep flying up. It's probably going to spend time going sideways into June. Okay? You don't want to hold that stuff when it goes sideways. It's a waste of money. Most of the time you'll lose money too, because like it has fees, and so the best time to make a lot of money is when you have a good trend. The trend was good from December. That's why I told people, or January, I guess, most likely, not really December. But yeah, most people got there from February, right? When I said like, okay, at the end of January into February, I buy Oil U. Dude, bro, that's 75% already in 2 months. No, because I don't know what Trump's gonna do. Fuck that shit. I don't think I mean, unless you have some insider information, I got no idea, because it's the UK since the last tweet. The last tweet was like what, an hour ago or something. What the like this? So this week we're down on UK oil. hell? So U.S. oil is down 9.57%. Okay, so he tweeted when? He tweeted here, down 4%. Yeah, fuck that. I ain't playing with this. Nah. It ain't worth my time. So no. So I was like, go long gold. Go long gold. Go leverage gold. Shit. If I held onto that leverage gold on Monday, I'd be up another 7%. It's up 8-9% right now. So I bought here, right, around where the opening is. So 150 got to ones like what 160 something. So yeah, I got 9%. If Trump didn't tweet before the market opened, I would have got a lot more. So like yeah, percent probably around there. Fuck. If I held it, yeah, probably could have got another 8%, 9%, 20% basically. Shit, whatever. Can't do nothing. Can't trust that. Don't have insider information. No help there. So yeah. So essentially, if you can sell it. If you have a lot of it, yeah, definitely, it's not worth holding on to for sure. Because I said like it's a buy and hold type of stock, but because of this Iran Trump stuff, damn, fuck that. It's too volatile. It's too volatile. I don't like that when it's too volatile. If you look at SOXL, personally, you could hold this thing, right? From April, no problem. But you would have had to suffer through this sideways thing. So let's say between October and December, you see how it goes sideways? Like, this is kind of painful. Here, so this is like, what, 10%? Oh, shit, that's 40%? Oh, yeah, this is leverage. My bad. I forgot this is leverage. So, like, yeah, that's like, you go up 40%, but then you keep holding it, you lose 40%. So that's why, yeah, you hold leverage. It's like, nah, bro. It's okay if you have a trend like between April, May into October. Okay, that's fine. But when you start doing this sideways shit, and it's like going up and down 5% is essentially a 25% on a 3x leverage, right? Or I mean 15% up and down. And then when you go like 10%, that's 30% up and down. No. You don't know if you are in a bad spot, because it could just be like this is the top. Any time here could have been the top on semiconductors here, but luckily it's kept going up, so you were fine. But now we're just like here, and now people are wondering, oh shit, is this gonna fall through? You don't want to hold that stuff there. You only want to hold it on a trend, okay? GDXU I use to replace my, so when I play gold, I was only buying the stocks. When you have GDXU and it's gold and silver and copper are going sideways, look at it. It's disgusting. Like, this thing is just like makes no sense to hold over many months. Okay, it's just zigzag. You're probably not making money or just losing money. This is not the way to do it. But when you came into July of 2025, August 2025, I start seeing a trend building. And then I'm like, okay, I'm going to start replacing all of my silver and gold mining stocks with just GDXU. Okay? So here, between August and October, it's like more and more I exposed more and more to GDXU. So even when GDXU popped, because we had like a quick pause on gold and silver into November, right here, this is just before silver really took over from gold. Silver took over from gold here between October through January. But you know, gold mining stocks are also silver mining stocks, because gold mining stocks, when they mine for gold, they also get some silver and some copper. A lot of the mines have multiple metals in them. So when you watch copper, silver, and gold, you watch them together. That will help you with the miners. And I bought more. I bought more GDXU. By the time it got up to here in January, I said like, oh, okay, this shit looks crazy. I better think about getting out of here. So by the time it got to this last part between late mid-January into February, right? We got to early February. It's just like I'm getting out. I'm getting out. People are talking way too much about silver. I don't like it. So yeah. So it's tough. It's really tough. When you do leverage, you only want to try to get as most of a range as possible. It won't be perfect. And for oil companies, I think, the trend is very nice, but I think from here on out, we are going to go sideways on oil companies. I mean, natural gas and oil. Oil companies also do some natural gas because when people go get oil, extract oil from shale, they get a lot of natural gas too. So a lot of these oil companies also are natural gas companies. Silver, gold dynamic, and copper dynamic of gold miners. So same thing. So long story short, I would just be selling because right now UwU is just down 2.4%, very little. So if you didn't sell last week, this week, definitely a good time. You don't want to wait till the final minutes just to bet on like Trump doing a invasion. Okay, I wouldn't risk it. I don't think if he does do an invasion, I don't think you'll benefit from it anyway. Oil going up too high will crash oil stocks because oil stocks require a good economy. Oil needs to stay at a certain level. You don't want oil to go up to 120, 150. All right. That's not good for oil companies because the economy is going to go down and people won't spend for energy anymore. So it's Goldilocks. It's Goldilocks for oil here. Not too high, not too low. The right price. Okay. Just stay at $80 a barrel. We cool. You stay at $80 a barrel, you can make money. That's the whole point. So that's something to consider as well. So that's why it's not worth it to hold on. Personally, because of all this noise is insane. This is not cool. I did not expect this. I thought we were going to have a smooth ride up, but that's okay. I mean, you made a lot of money in 2 months. You might as well take some profit, put into bonds or something else, and you'll get your 5% a year on bonds and wait. Just wait until June, all right? Okay, that's it. That's it for that. What else? No, I don't need any other tweets. No. Okay, we're good there. All right, I talked about all the tickers I needed to. 3 hours, 30 minutes. And I'll see what I want to talk about tomorrow or Friday. I mean tomorrow, yeah, tomorrow into Friday. I don't know. I don't know if I think I'm just gonna work on the Substack and the Boomer portfolio pretty much. I don't think I need to talk anymore. I think you have the idea of what you should do. Like you saw what I was trying to allude to you guys on Monday with the gold trade, but I don't have a crystal ball, so I can't tell you near term if you still have GDXU, is it worth holding for another 10%? Like theoretically, you should get another 10% after tomorrow. If after tomorrow GDXU gives you 8, to get another 8 to 10% after that. But fuck, I don't know. I can't tell you that. That's why I'm very reluctant to talk about short-term stuff. I think anybody that talks about short-term stuff like they know what the fuck they're doing is just like, no, I wouldn't trust them, honestly. I think that's just someone trying to scam you guys. I just try to tell you things that like make sense from a structural standpoint. Everything has to be from conditions, okay? That's all that matters. Anybody that tells you like short-term things is, yeah, it's probably a scammer. I don't know. Unless they have some special signal that they're willing to share to you. I doubt it. Anybody that knows that stuff probably will not share to you information. Okay. So let's see how much of this I could talk about. Done with that. Let's do semiconductor gases. And then we'll wrap up with China. How about that? So we can wrap this up. So semiconductor gases market driven by technological advancements in chip manufacturing. Okay. Okay, let's see. Try to. I think honestly, Iran isn't over, but I think the move in oil stocks are probably over. You get what I mean? So the thing is like, you have to think of it this way. Stocks always try to look forward in the future. If the Iran war already happened and is happening, now people are looking for the end of the Iran war. Of course, there's going to be escalation in between, but, or maybe not. Maybe there's no escalation, right? You're betting on escalation, trying to get that last juice out of the lemon. Most of the juice was already made between January into March. That was the juice. That was the main part of the juice. Everything else is just people just trading on tweets and emotions. It's not sustainable, and that means that's just a guessing game. It's better off you trade gold. Gold is beat up because of the Iran stuff. So if you think there's going to be a crash or pop, then might as well use gold. Gold will go down if there's escalation in the Iran war and oil pops, because oil now affects the dollar. The dollar affects the gold, and that stuff is more pronounced. So if you want to bet against Taco, short gold mining stocks. It'll crash another 20-30%. Easy peasy. It's going to go down a lot more than oil will go up. I mean, oil companies will go up. UwU. That's what you would bet on. If you think Taco, then gold will go up even more, and yeah, you can make another 50% off of that. So that's what I'm saying. That's why I said on Sunday night. I said like gold looks more delicious now. Forget like being long semiconductors or short semiconductors. So people who want it in are already in. Yeah, that's it. Supply is already there. That's it. The supply is already there. It's done already. You're basically hoping that there's more demand in the future, which is less and less likely as more and more people are already in it. So that's why you see gold going down. Right? If people wanted to buy gold because of Iran, that ain't happening because people are buying gold because of inflation. So yeah, that's how you gotta think about things. Semiconductor gases market driven by technological advancements in chip manufacturing. The global semiconductor gases market size is calculated at $11.69 billion US dollars in 2025. Okay, and it's forecast to reach around USD 2034. Okay, that's a double, right? Pretty much a double. Compounded annual growth rate. CAGR is compounded annual growth rate. Look it up. If you don't know business or finances, you can look it up yourself. CAGR. 7.3 is around 10%. That means it's like on average over many years. If you hold by a year on average, okay, that's basically how it works. That's why a lot of people, they just off their brains and they just buy 500. They don't want to think about it, right? 10% is very good. Very few bonds, like I said last, CAGR. All right, CAGR of 10% is way too hard to beat. Okay, the Asia Pacific market size surpassed 4.89 billion. Blah blah blah. Manufacturing facilities is boosting the demand for semiconductor gases. These gases are used in various processes such as etching, deposition and dropping during semiconductor fabrication. I don't know if you guys know about semiconductor fabrication, but its growth rate is going up. Blah 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 blah. Blah. Okay, let me slowly scroll it. The Pacific dominated the semiconductor gases market with the largest share of 45%. Blah blah blah. Specialty gases segment held the biggest market of 35%. So yeah, a lot of chemical and gas companies are going to make a lot of money. Also, these gases are used in hospitals, right? Hospitals also will use them. So I think a lot of health care. Gases will be a big demand because they're competing with semiconductors. Semiconductor gas market by enhancing efficiency and quality control, AI optimized. Oh, StreamYards, I don't got time for this shit. Oh my god. All right, whatever. All right, hold on. Let's continue. All right, I don't know where I left off. Okay, okay, we were talking about the semiconductor gas industry. Let's say like Asia Pacific dominated by a semiconductor gas market. All right, with largest share of 45%. North America is expected to expand the fastest CAGR between 2025 and 2034. By type of gas, specialty gas segment held the biggest market of 35% in 2024. By type of gas, the etching gases segment is expected to grow at a remarkable CAGR between 2025 and 2034. All right. By end-use application, the solar cells manufacturing segment is expected to grow at a notable CAGR between 2025 and 2024. Delivery mode, cylinder, and liquid segment contribute the biggest market share. So that's your medical shit. All right. Gas phase gases generated a major market share of 55% in 2024. All right, high purity segment accounted for a significant market share of 60%. Okay, AI is helping the revolutionize the semiconductor gases market by enhancing efficiency and quality control. Blah blah blah. Okay, so we have a $4.89 billion in 2024 is projected to worth $10.23 billion by 2034 in Asia Pacific, a CAGR of 7.66% from 2025 into 2034. So we got China, North Korea, North Korea, South Korea, Japan, India, and Taiwan. China is emerging as a key player in the semiconductors gas market. Okay, alliances between regional chip fabrication facilities and gas suppliers. There is a rising demand for next gen chip nodes, boosting the demand for specialty gases. Environmental concerns are pushing companies to explore low global warming potential alternatives and recycling methods. Okay, Vietnam and Malaysia are emerging here. So you can see like 45% is Asia Pacific right there in that map. Okay, North America is the fastest growing one. Okay, blah, blah, blah. Yeah, we got the CHIPS Act. Okay, market overview. Semiconductor gases market refers to the market for specialty gases used in the production of semiconductors, which are critical components in electronic devices. These gases are essential in various stages of semiconductor manufacturing, including deposition, etching, ion implantation, and cleaning processes. So, there is a lot of stuff that goes into semiconductor fabrication. We need a chemical engineer here to talk about this. So you need like Monty. Okay, Monty can come here and talk about this stuff. I learned a little bit about this when I went to grad school. But most people that take electrical engineering don't know how chips are made. They just learn how to use the chips, but they don't know how to make the chips. So you need some materials scientists and chemical engineers that can come here and talk about this stuff, because you need a lot of them. Actually, the CEO that got kicked out of Intel was a chemical engineer who was in the fabrication division. I think when they pushed him out, they used the excuse of like he was fraternizing with a woman in his department or something like that. Anyhow. Yeah. What's up, Peaksy? What's up? So, semiconductor gases like pure gases, mixtures, chemicals, which are used in processes like chemical vapor deposition, CVD. I think they spin the silicon wafer around and then they start spraying gases into there. So that's how they get that nice layer of material on there. This is how they put their metals onto the piece of silicon. Okay, you have tungsten, you have copper. What else you got on there? Probably, yeah, pretty much tungsten, copper. I don't know. They probably use some exotic materials nowadays. Plasma etching, oxidization, and quality precision of these gases play a crucial role in improving the yield, efficiency, and reliability of semiconductor devices. The market is experiencing robust growth driven by the surging demand for electronics, electric vehicles, and 5G infrastructure. Gases like saline, nitrogen, trifluoride, and hydrogen are essential in the production of memory chips and processors. As chip makers push towards smaller nodes and higher transistor densities, the need for ultra-high purity gases continues to rise. Governments and private firms are investing heavily in semiconductor fabs, fueling further demand. The market is expanding rapidly in several regions where semiconductor foundries are concentrated. Regulatory standards around gas purity and emissions control are also shaping the competitive landscape. So we have here rising adoption of EUV. So that's extreme ultraviolet lithography. This is the technology that they don't want to give to China. EUV lithography. So that comes from the Dutch ASML, the Dutch company that creates the machines that do EUV lithography. All right. So that's boosting demand for the specialty gases. Increased demand for environmentally friendly and low GWP gases boosts market growth. Okay, let's see. Localized chip manufacturing, automation, and IoT information on. Okay. What else? Surge in demand for logic and memory chips. Okay, got that. Strategic collaborations between gas manufacturers and semiconductor fabs. So this is the summary here. Take a screenshot of this. Blah blah blah. Okay, market dynamics. We don't need that. Straight opportunities. I think what's important, okay, is which companies are going to benefit the most from this. I think that's the end of this report here. And you can get the link from the description if you need to look at this. So here are the companies: Air Products and Chemicals Inc. I think that's what the fuck? I think that's which ticker symbol is that? Is that APD? Yeah, that's APD. For some reason, it's not APC. It's APD. So be careful with that one. And Lind, we talked about that a little bit because it's a European company that heavily does work in defense. But because the euro is so bad, I cannot recommend European stocks anymore. So sorry. Even though Lind would be a good company to buy for this, it's not going to be good. Praxar was an American spin-off of Lind because Lind was a German company, or is a German company now. And we had World War I. World War I, they basically said, okay, the U.S. division of Lind is forcefully cut off from Germany, and we get Praxar. But then Praxar merged back into Linde. So yeah, so it's still Linde now. So we don't have Praxar stock anymore. So you can't buy that. It's still Linde. And you have a lot of these other companies, Japanese and German. And like I said, Germans do a lot of chemical work. So so most of these you'll find German and now Japanese. So I don't know. It's gonna be hard to pick. When I eat Taco Bell, I make some ultra pure gas. Yeah. Can you sell that gas though? Because we have Galaxy gas. So sorry, so you guys do whippets on here. There's no whippets. Okay, sorry. So I can't tell you about the whippets market. So laughing gas. I don't know if the Strait of Hormuz has anything to do with laughing gas, but yeah, we will go over these things later. But like, okay, let me make sure you guys took a screenshot of those companies. Okay, let me go back here. Okay, here. Take a screenshot now. I'm gonna be scrolling. So we have one American company, that's APD. I don't. These other ones don't look American to me. They have SA on them, and they look Japanese. And like, nah, we only got Honeywell. This is BASF is German. Yeah, this is Chinese and Japanese again. Yeah, forget it. We got two Korean right here, LG and Samsung. Forget it. Nah, sorry guys, I don't have any American stocks. And we have some specialty gases. We got nitrogen, argon, hydrogen, oxygen, carbon dioxide, acetylene, right? Acetylene. I think if you know welding, you know acetylene. So Linde actually does a lot of acetylene. So if you actually weld with gases, you would know acetylene is very important. So they supply you with those tanks if you're welding with acetylene still. Precursors. Ooh, we got precursors. Yeah, okay. Etching gases, process gases. All right, take a screenshot. All right, screenshot that. Okay, done. Okay, but right now the only stocks that I talked about was BASF, Linde, and those were because they were European companies that had something to do with defense. Okay, so these are the German chemical manufacturers here. And I only know APD as the American one. Honeywell is not really a good stock, so I couldn't recommend that just because of this. All right. So this one here, Semiconductor Gases Market Report and Scope. Okay, so semiconductor gases, market size, share, segmentation, product, blah blah blah, by application, by region. So this one also, go to the description. You can go to this website, get this free information here. You have to pay for the extra information, but I think they say the same thing. I don't think they have anything else to talk about. So let's look at the companies they talk about, though. Air Liquide. Yeah, that's definitely not American, right? We got Linde right here. So now this one lists what gases are made by these companies. That'll be good to know, right? I don't know. Awatani, Grupo. That doesn't sound American. Air Products Inc. Maybe that's American. Do they have a stock? I don't know. SK sounds like it's Korean. And yeah, Praxar is a subsidiary of Linde now again. So no, you can't buy that one. That's Linde. Messer Group. No, I don't know what that is. So yeah, we'll have to look into this. All right, let's see what this one is. Okay, this one. Strait of Hormuz closure. Strategic implications for the global semiconductor industry. Iran has blocked maritime navigation through the Straits of Hormuz since the first week of March, following the attacks it sustained during Operation Epic Fury. Okay. I'm both. I do multiple things depending on the situation. So when you watch this show, you understand where I'm going at. When it's favorable, I will become a day trader. When it's not favorable, I will just buy and hold. If it's swing trading, I will do that. So it depends on the condition. I think that's where you get the most money. You know, that's really where you're going to get the most money, because you have to be so flexible now in different conditions to make good money in the markets over every year. And if you can do that, you'll survive the next coming decades, because I think it's going to get weirder and weirder. The 40-year bond market was kind of a illusion to me, because when my parents came here in the 70s, right, after the fall of Saigon and all that, you know, Americans were in essentially a recession. You had the oil shocks because the Arab countries protested U.S. support for Israel. So we're doing it again, right? And we're going back to the Middle East again. It's always the Middle East. And, you know, like going to war in Vietnam really created huge inflationary pressures on the U.S. economy. So from the 70s into the 80s, you had an inflationary moment. And most people were very pessimistic about like the future of the USA. And also Russia, you know, the nuclear war threat, all that. So that's why going from the 70s to 80s, you kind of have this like really pessimistic feel. And you hear that in music from the 80s too. It's very pessimistic, right? That's why you have that song Forever Young. Forever Young was actually the reason the song was made was because like they were afraid that they would just get bombed and they would be forever young, essentially, because they would be dying young. So if you think that's some kind of like had other meanings to that song, no, it was because of the nuclear war threats. But from that time, from the 80s into the mid 90s, things started to slowly change, right? We had one more crash because of the credit debacle. There was a credit debacle. A lot of people were getting loans. So that was similar to the 2008, but not as widespread because it wasn't tied into real estate per se. It was more of a general credit crash in the 80s. And then from then on, we had like the Iraq War 2.0. Yeah, 2.0, you had the Iraq War, not 2.0, I guess that's 1.0. I guess it's 2.0 if you consider the Iran-Iraq war before the Iraq Operation Desert Storm BS that George H.W. Bush put us through. So from that time on, then you have Clinton. So from early 90s into now is when the bulk of the bull market happened. But you have to remember, the bond bull market happened at the height of people's pessimism during the 80s. So that's what drove most of the market until now. Okay, we had a lot of that helping the bull market in stocks, because as interest rates kept going down from the 80s into the 2000s, 2020 at most, you have a lot of pressure that said, yo, we can push stocks higher and higher because interest rates are going lower and lower every time. They stayed low since 2008, right? Pretty much. They tried to raise it a few times, but you saw in 2018 the market crashed. 2019 it was volatile. 2020 it was just like, yeah, okay, now we got COVID, now you just slam the interest rates down. So it's very easy to push the market up when interest rates are essentially zero, right? Essentially zero. So we actually are in a position where we see interest rates higher, and that's kind of rare because we haven't been here since like the 80s. And that's why I kind of say, like, this has been 40 years from the 1980s into 2020s, right? And we're changing things. But so now back to the question, are you long-term trader, swing-term trader? I think you got to be both. I think you have the ability to be both, and you can also do things as a day trader as well when you see the opportunity. So on Sunday I said, like, go long GDXU. Yeah, you know, you could swing trade that and you could have got 20%. Right now after market it's up another 10% because of Trump tweets. But those things are very short term, and I don't like to do that, but when I see the opportunity, I'll take it. Let's just put it that way. But I won't put a lot of money in it. If I do a lot of money in a trade or investment, it's because I'm very confident it'll last many months to a couple years or more. So yeah, so I'll try to do as much as I can to make money that way. It's because I don't have a job, so then I kind of need to make some kind of income every month. So a little day trading here and there will supplement it. You get what I mean? But if you have a job, I would say, like, you shouldn't be doing day trading, because day trading, you got to be really good at it. And the second thing is, like, you're wasting a lot of time trying to monitor the markets or tweets now. Now it's just tweets, right? Time is money. I think there's easier ways to make money than day trading, honestly. But if you're really good at it, if you're one of the few that are really good at controlling your emotions and doing the trades, yeah, go for it. I don't see a problem, honestly. But if you're not that type, don't do it. And if you want to know if you're good at it or not, you should read this book. This is the first book I told people to read, because this is probably the only book I would really recommend, because it's so easy, and it's all it does is tell you about psychology. So okay, go on Amazon, go get it, or you could download it for free. It's called Trading in the Zone. Okay, I got this book for free because someone threw it out in the street. So one of the good things about living in some cities is that people throw away their books, and this is one I got because someone threw it out. Trading in the Zone. Okay, Trading in the Zone. You go to Amazon and get it there on that link, and it's by Mark Douglas. All right. Yeah, so I'll give you his name right here. And I think if you're very confident in trading, then sure, go for it. Try it out for a few days. See what happens. If you can make $1,000 every trading day, yeah, maybe you can do that. And I went over the mathematics of, like, if you were trading, what would you get? Let me see if I got that still. see. Let's see if I can find this. It's from the one of the old streams. Let's see. Let's see. Paste. Okay, I got it. All right. So let me go over this for a bit. How about that? Since you brought it up, I might as well talk about it. So, how much to trade in a quarter? Okay. We have 250 trading days a year. So about 62 trading days a quarter. Let's say I only want to do 20 trades a quarter. Okay, let's do some math. Let's say those 20 trades, I can guarantee about 10% gain on each trade. And so whatever profit I make, I put back and try to get another 10%. So I'm compounding that trade. Okay? So that means I get 1.10 to the power of 20. Because I'm limiting myself to 20 trades a quarter, all right? And I say I can make 10% gains. Even though I have 62 trading days, I'm going to trade only 20 of them. So let's say I could do that. Can I do that? Theoretically, you can, because you see me every day, right? I show you, like, oh, there's a 10% trade here, there's a 20% trade there, and it happens within 1 to 2 days. You complete. So if you do GDXU on Monday, it was 9%. If you GDXU over 3 days, because if tomorrow gets another 9%, that's like almost 20%. Okay, so you can, on average, can you do this? Let's see. So let's say I have $1,000. I have $1,000 times 1.10 to the power of 20. Okay, and that means I can make about $6,727.50 every quarter. Okay, here's the trick though. Can I make 10% every trade? And can I compound it? Because there could be a time when you only make 5% that trade. Maybe you lost 1% or 2% that trade. I don't even consider that. I'm just doing the ideal case where I'm like, I can get 10%. I can get 10%. All right. And I put it back. Everything I put back. Okay. I put that 1,000 and I put my profit right back on the desk and I go like, bet. Right? That's it. You put it on the table, you bet again. So you keep betting. Now, what I also do is after 3 months, I reset it back to 1,000. So that means every four quarters, which is 1 year, I do this. So that's how much I make every year is $22,910. But that's, again, I have to guarantee that I make 10% each time I'm doing this, which is like something I don't talk about in here, right? So we can do this as a mathematical formula. All right, we can turn this into a mathematical formula. We got the G, you got the K, you got the X. So X is where you start with $1,000 every quarter. You got the G is like the 10%, which is very aggressive in my opinion to do, because most people can't even do 10% consistently. You got the K, I do 20 trades only. That's my profit. So in percentage, I made 2,291. Okay, so this is the percentage profit. That's how I make. Now, if you remember when I did this stream, I talked about the Kelly, what was it called? The Kelly something, Kelly bet, Kelly criterion. Okay, and there is something where they apply this Kelly criterion to stocks, and they call this a Kelly-Thorpe criteria. Theory or whatever, betting strategy. And it has nothing to do with Ben or Grace Thorpe, okay? It's some other Thorpes. So the Kelly criterion, how to size bets. Let's play a game. I have a coin that lands heads 60% of the time and tails 40% of the time. So if if I say I can make 10%, is it 100% of the time that I do my trade I get 10%? Probably not. So if I use some lame technical analysis, usually it's about 60-40. Yeah. I think people have tried to analyze if technical analysis works, and they go like, well, mostly it's like more like 50-50. Okay, it could be that bad. So if I have $25 and I can bet on either side of the coin, every time you're right, you double your bet. And every time you're wrong, you lose it. So let's do this. How much should I bet, guys? How much should I bet? Okay, how much should I bet? Let's put it at $4. How about that? And since I know that heads is 60% of the time, I'm just gonna keep betting heads. Even if I lose, I'm gonna keep betting heads. Okay. I'm losing money now. Oh shit, I'm making money now. Oh yeah, baby, come on, I want to retire. Bruh, how long does it take to retire? But you see, at the beginning, I was losing money so bad, I could have blown out, right? Oh shit, this is a bad year for me. Oh my god, look at me, I'm losing money. Oh wait, I'm making money again. Oh damn, yeah. Okay, you get the idea, right? You get the idea. This is terrible. So I'm day trading, and if I have a 60-40% that I get it right, if I pick the right way, the stock is gonna move, the Bitcoin, the gold, oil. It's like, bro, this is ridiculous. I don't want to do this because it's 60-40. This is the problem. The problem is here. It's because like I can't guarantee that I can make money more than 60% of the time. I'm not even gonna try this. All right. So with this show, I'm trying to say that if I want to make a big bet, I just want to make one big bet. Okay. I want to make one big bet and get out. And that's it. I don't want to even play that whole like numbers game where I have to do a lot of trades, and because like I don't know if 60%, more than 60% of the time I'm gonna be right, then dude, I gotta keep doing this for how long? No, that's not worth it. So let's do this. So let's say I bet $20. What's gonna happen to me? Am I gonna win? Am I gonna win? Okay, yeah, let's do $20. All right, right here. Bet heads. Shoot, come on. Can I retire within a few bets? Come on. I'm almost there. Come on. So anyway, yeah. So let me reset this. I think the thing just slid back to like $4 something. Let's go. Okay. Yeah, I lost. That time I lost. All right. So I got lucky that first time when I did the first $20 bet. I didn't blow up right away. So, but this time I did. So that's why, the 60-40 ain't good enough. You're gonna need like something that tells you like maybe 90-10, maybe 90-10. I'll bet on something like oil. Yeah, that looked like a 90-10 bet to me. So I did that. There's like in April, you probably could have got a lot of 90-10 bets, right? But that doesn't happen all the time. Okay, most of the time it's just like, whoa, where are we gonna go? What should I bet on? What should I buy? What should I sell? I don't know. And then now you're relying on Trump tweets. No. If I'm relying on Trump tweets, then definitely I'm not gonna bet anything. Fuck that. So hopefully you get the idea. I try to maximize. If I'm doing like short-term bets, it's because like I have a good idea that the odds are in my favor. If the odds are not in my favor, I wouldn't even touch it. And And what I try to focus on is like something that can last for months to a year, and then I'll put all my money there. But I will talk about short-term swing trades and day trades too, because it's a good practice. It's good practice. It's good practice, honestly. You can look at a lot of charts, you can see some patterns, and the patterns will repeat in the long term. So you'll see that. Anyhow, back to the article. Let's see that. Yeah, it's good to cover that stuff from time to time. People figure that out. But yeah, there's more academic papers. They call it the Kelly Thorpe betting strategy for stocks, and you can find them. Maybe one day we'll talk about it, but I don't think I want to get into the details of that. I think most people don't need to have that much exquisite, I guess you can call it exquisite, detailed betting strategies. All right, so Iran blocked the Strait of Hormuz, blah, blah, blah. Okay, crude oil, yeah, we know that, blah, blah, blah. Let's get to the meat of this article. Okay, we'll talk about the disruption here. So a lot of stuff, a lot of maritime shipping is going around the Cape of Good Hope, okay. And so it adds 19 days to the transit times to and from Asia, generating weekly losses for global supply chains estimated at between $2 billion to $3 billion, additional operating and fuel costs. So this operational disruption directly affects the technological infrastructure of East Asia, where advanced semiconductors fabrication facilities in Taiwan and South Korea require vast continuous electricity supplies to operate lithography systems around the clock. These critical facilities, which account for approximately 68% of global semiconductor production, rely on imported liquefied natural gas, LNG, right, to ensure the stability of their power networks and prevent disruptions. Okay, we know that part, I think, a little bit. So, in particular, production lines require ultra-high purity helium gas. So this is something that was kind of talked about in the news for a little while. So the gases that goes into these semiconductor factories, extracted as a byproduct of Gulf LNG liquefaction facilities, which represent roughly 35% of global supply, as well as bromine, which Korean factories import at a rate of 97.5% from the Dead Sea coast for chemical etching processes. Accordingly, technology firms are accelerating efforts to assess their exposure to the dual energy and critical chemical input shortages. At the same time, economic stakeholders monitor the crisis trajectory with heightened caution to safeguard supply chain continuity. All right, so we got all that, I think. Yeah, good. Okay, let's continue. Okay. So the Strait of Hormuz exerts a decisive control over global LNG distribution routes. All right, we know that. Okay, 2024, Qatar exported approximately 9.3 billion cubic feet per day of liquefied natural gas through this maritime corridor. All right, so they blew up some of that, right? So Iran blew up some of them. They got 5 years to repair, 3 to 5 years to repair some of those places right now. So the UAE contributed to an additional 0.7 billion cubic feet per day. Combined, these volumes account for nearly 20% of global LNG trade. Moreover, the overwhelming majority of these shipments, ranging between 83% and 90%, are directed towards Asian markets. Against this backdrop, the suspension of production at Qatar's large-scale liquefaction facilities following military strikes, coupled with the physical closure of the strait, abruptly removed roughly 1/5 of global supply from the market. Consequently, Qatar Energy Company declared force majeure as a legal measure to halt deliveries, causing liquidity in the spot market to evaporate and leaving dozens of large LNG carriers stranded within the waters of the Arabian Gulf. Okay, major Asian economies import vast volumes of LNG to ensure the stability of power grids. Okay, blah, 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 we know that. So, let's see. China is the largest importer at 77 million tons annually, followed by Japan, 66, and South Korea at 47, and Taiwan at 22. Against this backdrop, the industrial architecture of the semiconductor manufacturing sector in East Asia faces a structural threat that directly affects overall production capacity and infrastructure stability. Collectively, these economies account for nearly half of global LNG demand. So, most of Asia wants half of all of the LNG produced in the world. So at the same time, the fabrication facilities which host some of the world's most critical semiconductor foundries depend fundamentally on the uninterrupted arrival of these refrigerated maritime shipments to prevent power outages. The following figure illustrates the import structure of these economies and Qatar's share with their supply mix. So you can take a screenshot of that. Okay, so we can go move on. So I want to talk about the helium right now. So let's see. The helium possesses exceptional physical and thermodynamic properties, rendering it a highly scarce strategic resource. The element is classified as the most stable and inert, as it neither combusts nor reacts with other chemical elements. So if you remember Hindenburg, they use hydrogen, right? That's why you had the Hindenburg blimp blow up. So now we know that helium is a lot better than hydrogen. Okay, good. So moreover, helium has the lowest melting point and boiling points among all known substances, remaining liquid even at temperatures approaching absolute zero. Accordingly, advanced semiconductor fabrication facilities rely on this specialized gas to continuously cool silicon wafers during plasma etching and chemical deposition processes, which we mentioned before. And in addition, helium plays a critical role in operating semiconductor magnets used in medical imaging systems. So yeah, the MRI machines also needs that, and quantum computing technologies. Well, that's the future, right? Okay, to understand helium's connection to the Strait of Hormuz, it is first necessary to recognize that helium is rarely extracted directly from underground in its pure form. Instead, it is recovered as an exclusive byproduct during natural gas processing, and the process becomes economically viable only when its concentration exceeds 0.1%. For this reason, helium extraction facilities are fully integrated into the large-scale liquefied natural gas infrastructure of countries such as Qatar and Algeria. Fuck. So you can't profitably get helium from underground unless it's a byproduct of what you get from liquefied natural gas. Shit. So, well, there you go. There you go, guys. So if you think you want to be green energy and all that, nope, sorry. There's so much stuff that goes into the whole petroleum industrial complex. I remember a guy is saying to invest in helium back in 2010. Did that guy do whippets too? I don't know. Whippets is nitrous oxide, right? So there's no helium in that. But anyhow, this complex engineering process relies on recovering evaporated gases and residual gases generated during deep cryogenic cooling. The helium-rich stream that then passes through multiple compression stages using specialized systems developed by companies such as Linde and ExxonMobil, with pressure ratios increasing by approximately 1.4 to 2.2 per stage until reaching final levels between 1,500 and 4,000 kilopascals. The gas is subsequently subjected to intense cooling to negative 169 degrees Celsius to separate nitrogen from heavier impurities, followed by catalytic filtration to remove hydrogen and water. Finally, the resulting stream enters cryogenic purification systems based on pressures, a swing absorption to achieve ultra-high purity of 99.999%. The purified helium is then liquefied and transported globally in highly insulated specialized containers. The following figure illustrates global helium production and each country's share in total output. Qatar, 62%. Okay, Russia, 80%. Damn. Well, there you go. Fuck. All right. Anyhow, global helium demand reached 177.3 million cubic meters in 2025, while production capacity stood at 175 million cubic meters annually. Oh, fuck. Well, we got more demand than supply. Guess those RAM prices are going to go up again, right? RAM is going up again. Sorry. It ain't getting any cheaper. Oh, fucking hell. So the semiconductor sector alone accounts for between 24% and 30% of the total global helium demand. So it's not those party balloons you guys are using. It's the fucking semiconductors, surpassing cryogenic medical applications. Analytical projections indicate that demand will continue to expand at a compound annual growth CAGR of 5 to 6% through 2035, driven by the rapid expansion of artificial intelligence infrastructure. Within this context, Qatar plays a dominant role in global supply chains, providing roughly 35% of the world's commercial helium, supported by ongoing expansion projects such as Qatar 3. Consequently, the suspension of Qatari liquefaction facilities following the military strikes, combined with the physical closure of the Strait of Hormuz, has abruptly removed more than 1/3 of global helium prices from the market. Oh well, guys. Sorry, folks. Every time you use Claude, you need a piece of helium. So not only you need water, you need some nuclear energy, you need anything, you need some helium too. It's not free, guys. It's not free. So that's why they're going to charge you more and more for your subscription to get it. So you can read the rest of this article. Very nice. It's free. So very kind of them to do this. March 19th. Okay, and you can get the article. A link in the description. So if you're on Kick, you go to the YouTube. You can find the articles in the description there. All Hop Tour Research Center. Thank you, Mohammed Shadi, for this article. Great. So it's about 4 hours, 20 minutes into this. So let me wrap this up with this thing. Let me wrap up with China here. So we got this article. China's quiet win in the Iran crisis. All right. Washington likely assumed it would choke off cheap Iranian oil to Beijing the same way it managed with Venezuela. Sanctions, shipping pressure, and financial arm twisting that reduce Caracas's discounted crude to a trickle. The logic seemed replicable, but it was also fundamentally flawed. Iran is not Venezuela. The Islamic Republic has spent decades building one of the most sophisticated sanctions invasion networks in the world. Hundreds of shadow tankers, fake shipping signals, front companies across dozens of countries, and open sea transfers that make interdiction vastly harder than in the Caribbean. Most importantly, China was not caught off guard. Beijing has been watching the U.S.-Iran standoff with the calm focus of a chess player who has already seen the next several moves. By the time the oil shock hit, China was not scrambling for supply. It was ready. China's resilience to the Iran shock and potential gain comes from several strategic fronts. The first is the massive buildup of crude oil inventories, which has been happening for years, but even more so in the first 2 months of the year as Russian oil imports rose roughly 400,000 barrels per day above their usual pace. This added around 24 million barrels to Chinese storage. No coincidence, but rather a well-timed action. Man, even China knew you guys were going to go at Iran. Come on, why would they be accelerating their buying? Okay. Yeah, he's probably, yeah, I mean, he's at 5 o'clock, he'll be live. Yeah, so I'm already wrapping up here. I'm reading this article and the next one. So, in doing so, China bought itself time by taking advantage of very cheap oil. We talked about this some streams ago, probably 2 weeks by now. We talked about this. So they've been building and hoarding lithium, copper, aluminum, oil. Why would they be doing that? They're getting ready for war, of course. China has built so much refining capacity over the past 2 decades that it now produces more refined fuel than it uses at home. Yeah, who's buying that? So they got gasoline, they got diesel, they got jet fuel, they got fertilizer. So who's buying that? When it cut jet fuel exports to Australia, aviation supply chains were strained almost immediately because Australia had quietly become almost entirely dependent on Asian imports for its aviation fuel after shutting down its own refineries. Well. There you go. Asia's doing this shit right there. That's it. They got everything. The fertilizer restrictions are even more pointed. China is one of the world's biggest producers of nitrogen-based fertilizers, with farmers around the world, particularly in Asia, Africa, and parts of Europe, dependent on Chinese exports. When these are restricted, crop yields fall and food prices rise. This is leverage that cuts deep and requires no military action whatsoever. This is what modern economic statecraft looks like, building industrial capacity so large that it generates not just profit, but power. The third argument for China's relative strength is most counterintuitive. For most countries, an oil shock is simply bad news. Energy costs go up, production gets more expensive, prices rise, purchasing power falls, and growth slows. For a country already dealing with inflation, like the United States, that is a serious problem. The Federal Reserve, which has been battling inflation that never quite fell back to 2% target, now faces an impossible choice. Keep rates high to fight rising prices and risk pushing a slower economy into recession, or cut rates to support growth and risk letting inflation run again. But China's problem going into this shock was opposite: deflation. Prices have been falling, not rising, especially at the factory level. This matters because deflation is a trap. When prices fall, consumers wait to buy, expecting lower prices tomorrow. Businesses cut prices to win customers, which confirms the expectation of further falls. Investment dries up. Japan fell into this trap in the 1990s and spent 3 decades trying to get out. An oil shock, strange as it sounds, helps China here. A moderate rise in energy prices is a reflationary push that nudges prices upward towards healthy territory without triggering a full inflation problem. China can absorb this better than its rivals for several reasons. It has large domestic oil production priced separately from global markets, so the shadow fleets. It buys Russian oil under long-term contracts at a steep discount. It has strategic reserves to cushion spot prices spikes, and its integrated refining sector captures value locally that offsets some of the costs of pricier crude. So, okay, let's stop there. That's the theory, right? Now let's read this other article, and then we'll close it off here. Iran's conflict could flip China's deflation into bad inflation. So what the hell? I thought inflation was good for China. Now you're telling me inflation is bad for China? What the fuck? So China's long fight with deflation risks morphing into something harsher, with economists warning the war in Iran could spark bad inflation at a time when chronically weak consumption and fading external demand leave the economy with little cohesion or cushion. Beijing's deep strategic oil reserves, diversified energy mix, and tightly regulated energy market gives it a buffer few developed economies enjoy. So we just read that. But the other article told me is bad. Now this one tells me is good. Wait, or that one tells me is good. This one's bad. What? So particularly in Europe, where stagflation risks are rising. Nonetheless, an input cost shock to the world's largest manufacturing base, which employs hundreds of millions, threatens to squeeze already thin margins, piling pressure on jobs and wages. Analysts at Gavakal Dragonomics, what the hell, and Shuchao Securities estimate that a 10% oil price rise could lift producer price inflation. So that's PPI, currently at minus 0.9%. So that's definitely deflation right there. By 0.4 percentage points. So it will increase by 0.4. So we got what? Minus 0.5% deflation now. Brent oil prices have risen 45% since the U.S.-Israeli strikes on Iran began on February 28th, putting factory gate prices on course to turn positive as early as in March for the first time in over 3 years, bearing a swift end to the Iran conflict and a recovery in energy supply. Yet for Beijing, escaping deflation this way would be cold comfort. There is good inflation and bad inflation. Pure cost-push inflation is not what we want to see, as it can squeeze corporate profits, said Shuang Ding, chief China economist at Standard Chartered Bank. This shock to input costs, now spreading beyond energy as commodities bypass the Strait of Hormuz, comes at about a quarter of manufacturing firms are already operating at a loss. Years of industrial overcapacity and steeper U.S. tariffs have gutted margins, driving relentless price wars on multiple fronts. Man, I mean, okay. I thought China figured out how to deal with the high inflation to the U.S. by exporting to other countries, but I guess that's not enough. Costlier energy and raw materials risk further squeezing jobs and wages, depressing consumer demand. This partly explains why economists estimate consumer prices would only rise to 0.1 to 0.2 percentage points for every 10% increase in oil prices. With intense competition and limited pricing power, firms are more likely to absorb higher input costs through margins rather than pass them on. Oh, shoot. So even in China, they're not willing to raise prices when the oil prices are going to rise to increase their profits? Uh-oh. Per capita disposable income rose 5% in 2025, slowing for a second straight year, official data shows. But a survey by recruitment firm Hayes released on Wednesday showed 51% of employees in China did not receive a pay raise last year, the highest in Asia, where the average is 36%. A tenth even took a pay cut. Half of the Chinese surveyed expect their salaries to stay flat or decline this year. Some 16% of youth are unemployed, and that's the official number. So the real number is probably twice that. So it's probably like 20-something to 30-something percent. At a Beijing job fair in mid-March, 25-year-old Justin Zhang, looking for marketing or tech consulting roles, said he received no job offers after 700 to 800 online applications. It feels like they disappeared into a void. It's been really hard. China is better shielded against the crisis than most Asia or Europe, but it still needs a strong global economy to hit its 4.5 to 5% global growth rate this year without resorting to unplanned stimulus. Much of China's 2025 expansion was underwritten by trade, with surplus jumping a fifth to a record 1.2 trillion, roughly the size of the entire Dutch economy. For China, the main threat from the Iran conflict is that it could retard consumption globally, with obvious consequences for Chinese exports, said Alicia Garcia Herrero, Asia Pacific chief economist at Natixis. This will further reinforce the weakness of global domestic demand in China, with less investment from profitless companies and deceleration of consumption as wages come under further pressure, she added. She also said models showing a 25% rise in oil prices would shave 0.5 percentage points off of China's GDP growth. Still, the energy shock that followed Russia's invasion of Ukraine in 2022 weakened Western production relative to Chinese exporters, which retain access to cheap oil from Venezuela, Iran, and Russia, with only the latter now still guaranteed to flow. So we knocked out Venezuela, you knocked out Iran, you only got Russia left. So I think this is the scenario right now. I don't know. I don't know if honestly Trump kind of like has an alignment with Israel, because like if you're gonna go at China, you know, this is how you would do it. You would basically try to take out Venezuela, you take out Iran, and then eventually you come back around to Russia. Russia will be the only one left supplying cheap oil to China, because the reason the Chinese economy isn't doing as badly as it could be doing is because they're getting energy at a discount from the sanctioned oil. But that looks like to be coming to an end unless Trump tacos and lets Iran do what Iran does. So we will see. We have a 5-day extension to the deadline from yesterday morning. It will be Saturday. Saturday will be the time when you will see like something happen, maybe or maybe not. I don't know. Will we attack the energy infrastructure of Iran at that time? Currently, we got another tweet after the market closed today. Now it's like we got a ceasefire deal. I don't know. I can't keep up with this shit, and I don't really care. But anybody that trading gold, silver miners should be happy. I think that's the best trade to make. Last I saw, it was up 8%. I don't know what it's at now. Let's see. We're at 5 o'clock my time. Okay, so 8 o'clock Eastern. Let's see. All right, are things going? Yeah, silver's doing good. Okay, up 1.8%. Okay, doing nicely. Gold up 1.37. So yeah, if you still have GDXU, you should be doing fine. That was the correct choice that I made Sunday night. All right, guys, go over to Deadman's if you want to watch whatever. I don't know what's going on. There's nothing to talk about in the Boyd, really, or at least our side of the Boyd. There's plenty to talk about in other sides of Boyd, but people aren't interested, I think. So, Mr. Deadman. So, Mr. Deadman, DT, Diego Tango. All right, that's the channel name. So, see you guys. I'll be over there, I guess. I'm gonna go eat first. Okay, I'm hungry. I'm fucking hungry. Can I drink some oil? I wish I could just drink some crude oil. All right, later, guys.